Till the start of cash equities trading. I'm Anna Edwards, live in London with Tom Mackenzie.
And here are your top stories. Traders weigh the economic recovery after data overnight points to a slowing US labour market. That's ahead of the key August jobs print tomorrow. Investment garbage. One-time bond king Bill Gross talks trash about treasuries. Literally, rates rebound after an initial sell-off on his comments. Plus, the long march. The CEO of the Hong Kong Stock Exchange sees China's regulatory reform continuing and governments around the world following suit. We get the take of HSBC CEO later.
So, markets then just a few seconds away, 10 seconds or so away from the start of equity trading here for European stocks then, Tom, and futures certainly pointing, well, not in any direction really, flat for many of these markets. Even the German market that was a little lackluster just a couple of hours ago, now pretty much in with the pack and fairly flat, being the suggestion for the start of the trading day. We've got jobs to look ahead to tomorrow, thinking about Chinese regulation. Where do these European equity markets open up?
Yes, certainly, of course, a big focus on what's happening with jobs as we lead up to the open here for the European markets, the US, of course, as well. Weighing up that picture with the data that we got overnight and, of course, what we're seeing in terms of the PMI and a rollover there. Amidst all of that, the discussion from the central bankers about the direction of travel for stimulus. Jens Wiedmann, of course, coming out from the ECB, the Bundesbank yesterday, calling for a focus on those risks. We got PPI, by the way, out at 11 a.m. local time when it comes to Europe as well. The FTSE 100 is down 0.2% just in the first few seconds. Spain is losing as well, just 0.1%, and the CAC 40 is also lower by close to 7 points. That is the picture just in the first few seconds of the trade here. The euro dollar is about 118. The 10-year in the US is just below 130 the last time I checked, at 129. Anna.
So that's where we started the European trading session. Not big movement in terms of equity markets. We've certainly seen substantial movement in anything related to interest rate expectations in Europe, and that conversation really heating up. The euro climbed to a 4-week high yesterday after more ECB officials weighed in on an intensifying debate over when to end stimulus ahead of the central bank's policy meeting, of course, which takes place next week. Europe's economic rebound and surge in inflation has sparked the debate, with Bundesbank President Jens Wiedmann the latest official to weigh in.
We should also not ignore the risk of excessive inflation. Considering the existing uncertainty, we should not set in stone this very loose monetary policy stance for too long.
Let's get some analysis then on where we head on European assets. Jeremy Stretch, CIBC head of G10 FX strategy, joins us. The perfect voice to talk to you then about the euro and its recent run of form. Jeremy, very good to speak to you. So the euro at a 4-week high as we're launched into a new school term and a new conversation around the eurozone. How much stronger do you think the euro gets from here?
Well, we have seen a substantive rally over the course of the last few sessions. I think we are running at 8 daily higher highs in terms of euro dollar from that low at 116.64 of a few sessions ago. I wouldn't necessarily want to be chasing the euro substantially higher from these sort of levels. We did test up to that early August high, 118.57 yesterday, and I think unless we break up through there significantly and break up through 119, I think we are getting towards a little bit of a top here. It does feel as though we're getting a little bit overbought. And you're absolutely right that we have seen a little bit of a fight back from the ECB governing hawks over the course of the last 24, 48 hours. Weidmann, Holtzman, Knott have all been pushing the case for a rowing back in terms of bond purchases. But I think the central bank narrative from the governing council members, who are the key policymakers in terms of Lagarde, De Guindos, They will continue to argue that inflationary pressures are going to be temporary. They will fall back into 2022. Their core inflation measures remain relatively contained. And also, if you look at market-based inflation expectations, they also remain substantially below 2%. So I think the euro rally is pretty fully valued here. But of course, that really depends also on how non-farms come out tomorrow.
Indeed, Jeremy. How do you fold that into your view on the US dollar then?
Well, I think clearly non-farms are going to be integral to the policy perspective and in view of obviously the tapering dynamics. Now, we at CIBC have been one of the best forecasters of non-farms over recent months, and we had anticipated a very strong gain of around 900,000. But after the ADP miss yesterday, that's a second straight ADP miss, and the weakness in the manufacturing ISM employment data, we have tempered our enthusiasm slightly. But we're still looking for an 800,000 employment gain, which still is going to be above the consensus. And I think that in itself should keep open the debate about tapering coming sooner or later. That should push US real yields higher. And I think that will over time help to sustain dollar valuation. So I think this recent dollar weakening, I think, will start to run out of momentum if we still see a payrolls number out above expectations tomorrow.
In terms of the European conversation where we started, Jeremy, do you see any substantial change in expectations for the meeting next week? Is that going to be on the radar, or do you think the hawks, as vocal as they've been in the last week, will be outnumbered?
I think the hawks will be outnumbered. I think they will become and have become a little more vociferous, and I think we have seen, of course, the degree of dissent that we did see to the change in the forward guidance at the last meeting, but I think the hawks will become a little more vociferous because we do have this identification of those price pressures because of that flash HICP reading. But as I say, I think it will be pushed back by the predominant majority on the governing council. And of course, next week's meeting does include those updated GDP and CPI forecasts as well. And in a sense, the upgrade in HICP expectations does give the hawks a statistical justification for their arguments, but I think they will be pushed back, and I think the reaction function of the ECB will remain unchanged, and probably the PEP purchases will also remain unchanged as we move towards year-end.
Jeremy, keenly focused, of course, on the German elections, the different outcomes and the different combinations for potential coalitions. What would an SPD-led coalition mean for your view on the euro?
Well, I think that's interesting because, of course, that wasn't the primary likelihood in terms of a coalition congregation, certainly at the beginning of the summer. But it looks increasingly likely that Olaf Scholz will be the new chancellor, at least on the basis of the current opinion polls. Now, the question is, how will that coalition be comprised? Will it include, would it be a sort of a red-red-green coalition or something certainly of a much sort of looser fiscal environment? But I think Scholz has suggested that the debt brake would be put back into place in 2023. But there is a risk that we will see an easier fiscal environment than would otherwise see if we were to see a continuation of CDU-led German government. And I think that will, at the margin, provide a little bit of offset for a very easy monetary stance from the ECB. But I think only at the margin. We are still assuming that the ECB will be remaining exceptionally easy, probably all the way through until 2024. So it's at the margin, which may have an impact, but I don't think it changes the absolute parameters in terms of the euro trajectory.
Okay, and sticking with the German electoral theme, Jeremy, I just wanted to get your thoughts on the time horizons that are going to be interesting here for those trading currencies and other assets related to Germany. Because, of course, we have the election itself coming in just a few weeks' time, but then we all know that it takes months to put together coalitions in Germany. I wonder, with that in mind, what kind of market preparations you take for this kind of electoral risk?
Yes, that's absolutely true. I think after the last election, I think it took almost 6 months to form a coalition. So in a sense, you end up with the immediate market reaction of looking at those results, and you make an assumption as to the likely governing coalition, and then you have to wait for that coalition to eventually be formed, and then to put out an effective policy platform. So there is a little bit of a two-pronged attack here. So you will see markets reacting immediately after the election results start to come through at the end of the month, after the poll on the 26th. And then we will make assumptions as to the likely coalition process and how that will likely play out. and then you may get a smaller reaction over time as those coalition negotiations work their way through, and we see policy being formulated on a slightly more prescriptive basis.
Okay, Jeremy, on the complexities of the German political landscape there. Jeremy Stretch from CIBC stays with us. We'll be discussing the US, EM, and other currencies after this. Right, coming up, US companies added fewer jobs than expected in August as persistent hiring challenges suggest a slowdown in the labor market recovery. We're going to focus on the world's biggest economy next. This is Bloomberg.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Welcome back to the Open. We are 11 minutes into the European trading day. European stocks just about turning around and now very modestly in green territory.
Yeah, certainly a little bit greener than the futures had suggested, but not by much, as you mentioned, Tom. Let's have a look at some of the stocks that are on the move then this morning, and we'll start with the pharmaceuticals space, and specifically Swedish orphan Biovitrum AB, also known as Sobi. It is being sold to two private businesses for $8 billion, the largest shareholder of the Wallenberg family, supporting this transaction. This has been talked about as a potential takeover target for many years, and either rival drug makers, Tom, or buyout firms said to have been of interest. Well, these buyout firms that are taking this business, they both say that the substantial investment that this business requires will be better done in the private space. So we'll watch that with interest. You've got gamers on your mind.
Yeah, gamers in Poland, some strong earnings there from CD Projekt. You're seeing the stock up more than 5%. Some very currently up more than 40. Currently up. Let's have a look now. 8%, 9%. There we go. It keeps going up. 15 points, gaining more than 9% there at CD Projekt. Again, strong earnings, some very strong, heavy trading volume as well. Maybe a beneficiary of that work from home, or at least the pandemic play through to the gaming space there. Again, some strong earnings for CD Projekt.
And let's move on to the drinks sector and Carlsberg, because we have JP Morgan analysts cutting their recommendation on Carlsberg to neutral from overweight. So we see the stock is down by just over 2%. Carlsberg reported sales that topped estimates for the quarter on August the 18th. But this is the view of JP Morgan analysts right now, and the stock is a little weaker, Tom.
Okay, and US futures fairly flat, as we're saying. The European markets have just about turned around. This is after the biggest tech stocks rallied yesterday, of course, in the US, sending the NASDAQ 100 to an all-time high. Investors are now looking ahead to the US non-farm payrolls due tomorrow. That's after Wednesday's ADP reading showed companies added fewer jobs than expected in August, reflecting persistent hiring challenges. Jeremy Stretch from CIBC is still with us. Jeremy, you've talked about your views on the dollar, but I just want to unpack your analysis when it comes to the time frame for tapering as we look at these jobs numbers, the forecast for 750,000, what it does in terms of the time frame for JPAL and the taper, weighing that up against economic data out of the US that suggests that the growth trajectory has started to peak there. How are you factoring all of that in to the longer-term view on the US dollar?
Well, you're absolutely right. There is a lot to unpack there, but clearly the labour market is integral to the tapering debate. And of course, we saw that reflected in many of those Fed speakers immediately ahead of Jay Powell last week. So I think if we can see an employment gain which is still above consensus, then I think that leaves the tapering debate as a live one. And I think that tapering discussion will be integral to the September FOMC decision. And I think we are likely to see tapering probably before the end of this year or the beginning of next year. And I think then we will see the Fed looking to hike rates probably in the third quarter of next year. So that sort of underlying sort of structural support for the recovery story, or the labour market providing structural support for the recovery story, I think will play into that supportive US dollar narrative. We are still looking for that central bank divergence play to remain very evident. And I think the assumption of the sort of the terminal rate in the US of just over 1.5%, I think still looks too low to our expectation. So I think over time, the resilience of the labour market, and we see this disconnect between vacancies and employment start to correct, then I think that will play into a stronger US dollar narrative over the medium run.
Yeah, we do see a lot of stories, Jeremy, at the moment about labour shortages, and not just a European story, but also over in the United States. I mean, is that something that you think will correct and is not going to be a structural issue we're dealing with for months and years to come?
Well, clearly there have been issues, in particular for those workers that have had difficulties with things like childcare, for example, when we've had school closures. So that has meant that people have stayed out of the labour force. And of course, there is still a degree of residual uncertainty as the COVID crisis continues for some people to move back and return to previous labour and employment. So there are some structural factors which I think will take some time to work through. And yes, you can argue that vacancies are at record levels in many jurisdictions, but we're not seeing significant levels of employment growth. And you could argue that perhaps the skill sets are not necessarily obviously matched. So that might take a little bit of time in order to facilitate that closing of skills gaps in certain sectors. But I don't think it is a protracted and structural problem which will persist indefinitely. So I think we will see the imbalance starting to close over time. But of course, in the nearer term, we do have this issue about wage growth, and that is another factor which the central banks are going to have to consider, and whether wage growth is going to also become rather more systemic, and that could create a slightly stronger inflation dynamic than we've become accustomed to.
Jeremy, which EM FX are most vulnerable to that modestly bullish view that you have on the US dollar?
Well, I think you end up looking at those that probably have the highest degree of leverage, and if we are going to see US rates gradually climbing over time, then I think it does leave those that are sort of indebted and potentially having the weakest sort of structural positions in terms of current accounts and trade and fiscal positions, I think, as the potentially most vulnerable. I guess the key dynamic, though, in the EM space in general is the growth trajectories globally going forward, and whether we are going to see further variant strains coming back into the Northern Hemisphere winter. One hopes not. but clearly that will be another risk to the sort of the global growth story, and that will be a structural and systemic risk factor for the EM space. But I think if we are going to see a moderately supportive US backdrop and gradually increasing US rates, then I think that will put some issues on those that have the greatest funding needs.
Jeremy, thanks very much. Jeremy Stretch, CIBC Head of G10 FX Strategy. Thanks very much for joining us. Let's get a Bloomberg Business Flash then. Top corporate stories that we're tracking here at Bloomberg. Here's Simone Foxman.
Thanks, Anna. Paramount has delayed the release of the Top Gun sequel into next year as Hollywood continues to wrestle with the pandemic that has kept many people from the theaters. The film, which stars Tom Cruise, was expected to debut in November and will instead move to May. The studio plans to release it exclusively in cinemas rather than trying to pursue a simultaneous release on a streaming service. Wells Fargo pushed back its return to office plans by 2 more weeks to mid-October. The company, which has the most employees of any U.S. bank, will now start bringing back staffers who have been working remotely starting October 18th. Apple's resolved a long-running dispute with third-party app developers, agreeing to allow links to external websites for customer signups, which means many developers will no longer have to pay an App Store commission of up to 30%. The change is part of a settlement with the Japan Fair Trade Commission, and Apple says it'll be implemented globally early next year. And that's your Bloomberg Business Flash. Anna, Tom.
Simone, thank you very much indeed. Okay, coming up, counting down to Germany's election, just over 3 weeks, just 3 weeks away. And we look at what kind of government we could see after polling day in Europe's largest economy. That story is next. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
One of the jobs of an international bank is to comply with complex laws and sanctions laws wherever they're implemented. And that complexity has increased, but we'll navigate that as we have done so far, and we'll continue to do so going forward.
That was HSBC's CEO, Noel Quinn, speaking exclusively to Bloomberg's Francine Lacqua. You can watch the full exclusive interview first on the Bloomberg terminal, starting at 11 p.m. London time, and then an hour later, you'll be able to catch that conversation on Bloomberg Television and Bloomberg Radio, along with our other platforms. We are 23 minutes into the European trading day, flat essentially across the benchmarks here as we look ahead to producer prices out at 11 a.m. across Europe. But of course, that key data point, the non-farm payrolls, keeping investors, many of them at least, on tenterhooks, that is out Friday. That is the picture across the European trading day, as we say, 23 minutes past. Anna.
Yeah, US futures flat to positive as well. Let's turn our attention to German politics. We're just over 3 weeks from the election that will change the political landscape in Europe's largest economy as we near the end of Angela Merkel's time in power. Now the focus turns to what kind of government, what kind of coalition we could see post-election. Bloomberg's Maria Tadeo joins us now in Berlin. This is the time, every few years, we have to become expert in the flags of Jamaica, Kenya, Germany, many other countries. If we want to really get to grips with German politics, help everybody understand what I'm talking about, Maria. Which are the coalition options that are gaining traction?
Yes, Anna, you know, it's very hard. I think there's about 8 different options, 5 different parties that statistically, mathematically could get into this coalition. But there is one in particular that is really gaining momentum, especially in the political debate here in Berlin, and that is the traffic lights coalition. A lot of that would assume that the SPD wins the election. By the way, Anna, we just had a new poll that is putting the SPD on 25% in the election, so cementing that lead, and would be in this hypothetical traffic lights coalition also joined by the Greens and the Liberals in Germany. That is a coalition, as I said, that's really driving the political conversation here in Germany. It is seen as the option that Olaf Scholz would favor if he were to win the election. Polls continue to say that will be the case when we get to September 26. It will be Olaf Scholz, the next chancellor, but the coalition making will be a very difficult process because, Anna, when you look at the Greens, they have said that for them, hitting those climate targets is a crucial point. For the Liberals, they say that this is about not increasing taxes and that some of those climate targets would be detrimental for the German industry. So this is a very tricky balance of power that Olaf Scholz will have to or would have to oversee. And it's a very complicated mix of different parties to put together. You know, it's the additional difficulty that it's not just 2 different groups working together, but the fact that we're heading into a 3-way coalition.
Yeah, and one of those contenders, the Free Democratic Party, Christian Lindner, increasingly seen as a kingmaker, Maria. What is happening with that party and how can they play a role here?
Yeah, look, he is. And again, this really signals this huge change in dynamic that we've seen in the German election. You know, just a few weeks ago, it was all about Annalena Baerbock and the Greens. Now it's pretty clear that they would have a very strong incentive to join a government, whether it's led by Olaf Scholz or Armin Laschet. The Greens can work with both. So the focus is now on the third party, and that is Christian Lindner. If you remember, in 2017, that coalition with the CDU, they blew up that government agreement. At the time, Christian Lindner said it's better to not enter a government than enter a bad government. The incentive, however, is that that type of operation carries so much risk that he may not be inclined to repeat that, to not facilitate a government for the second time.
Okay, Maria Tadeo in Berlin with the different potential combinations when it comes to German politics. Coming up, tackling climate change. We look at how JP Morgan is backing companies which are developing solutions to the climate crisis. That story is next. This is Bloomberg.
日会場に行って観戦するということも難しいお子さんがいるんです。このように冷房の効いた香港の体育館の中で、それこそ大会の最前列で観戦ができる、体験ができる、こういうことをとてもありがたいことだなというふうに思っていますし、この技術に感動しています。予想以上に子どもたちの反応が良かったというのはですね、とても校長として嬉しく感じております。この子どもたち、どれだけオリンピックの心待ちにしていたのかっていったことがよくわかるような今日の表情です。
Friday, a Bloomberg exclusive. HSBC CEO Noah Quinn sits down with Bloomberg's Francine Lacroix. Find the full interview starting at 5 a.m. Hong Kong time Friday on the Bloomberg Terminal, and then at 6 a.m. and throughout the day on Bloomberg Television, Radio, and Quick Take. This is Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. 30 minutes into your European trading day for this Thursday morning. Here are your top stories. Traders weigh the economic recovery after data overnight points to a slowing US labor market. That is ahead of the key August jobs print tomorrow. Investment garbage. One-time bond king Bill Gross talks trash about treasuries, literally. Rates rebound after an initial sell-off on his comments. Plus, the long march. The CEO of the Hong Kong Stock Exchange sees China's regulatory reform continuing and governments around the world following suit. We also get the take of HSBC's CEO later. Lots going on then when it comes to these markets. Not really reflected in the overall movement in equity markets, though, Tom, as we've got some of the jobs picture from the United States on the private sector, waiting for the fuller jobs picture for tomorrow.
That is a primary number, of course, for investors. I would argue maybe that we're in a Goldilocks scenario for stocks here, though. You've got the PMI data rolling over. You look at the JP Morgan Global Survey of PMI. The fact that Delta variant seems to be on the back foot in some of these countries, and the fact, of course, that you have central banks, CBs, continuing to provide that support because, of course, the economy and the recovery is starting to slow. Maybe that dilutes the kind of comments that we've been hearing from Jens Weidmann of the Bundesbank, of course, calling for a focus on the risks around inflation. In terms of the benchmark today, you're seeing gains just in the last few minutes, a bit more optimism coming through for the European markets, gains of more than 0.1%. In terms of how it breaks down on the index basis, the FTSE 100 is flat, essentially. Basic materials a bit of a drag there for UK stocks. Iron ore prices in focus for the likes of BHP, for example. DAX is gaining 0.1%, and the CAC 40 is up just close to 3 points. A focus on the producer prices out later today in terms of margins and that inflation conversation. We can switch it on to the sectors, and I was talking about the fact that materials are under a bit of pressure, but broadly at the top of the list, industrials and chemicals, auto parts as well. Just some modest gains here this morning in the first 30 minutes or so of trading here. At the bottom of the list, you're talking real estate, technology, and again, basic resources under pressure as well. Okay, let's move it on now, get the first word news with Simone Foxman in Doha. Simone.
Thanks, Tom. New York and New Jersey have declared states of emergency due to record-breaking rains as the remnants of Hurricane Ida pummeled the region. Manhattan's Central Park got 3 inches of rain in a single hour, while New York Airport, New Jersey, got more than 6 inches in 3 hours, roughly the equivalent of 7 weeks of average rainfall. The flooding halted train services, downed trees, and swamped the streets. The U.S. Supreme Court refused to block a Texas law outlawing most abortions after 6 weeks of pregnancy in a 5-4 ruling. The rejection marks a watershed moment, allowing a law to stand that's at odds with previous rulings that protect abortion rights until much later in pregnancy. The order hints the conservative court may be ready to overturn the landmark 1973 Roe v. Wade ruling. The Taliban and other Afghan leaders have agreed on the formation of a new government and cabinet under this group's top spiritual figure. A Taliban official says an announcement will come in a few days. We're told the Taliban had been waiting for the full withdrawal of U.S. troops before making any public leadership plans. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Simone Foxman in Doha, thank you. Okay, let's turn to climate change now, or the climate crisis. And last month's UN report has underscored the urgency of focusing on global warming. Some investors might be wondering how they can play their part in the low carbon transition. JP Morgan has set up a fund seeking to invest in companies which are developing solutions to the climate crisis. Joining us now, Katie McGee, investment specialist at JP Morgan Asset Management. Katie, thank you for joining us. As things stand, what is the gap between technology innovation and the challenges posed by the climate crisis?
Thank you. Thank you so much for having me. And that's a really good point. So this UN report that came out last month effectively highlighted the urgency of addressing the climate change challenge. Temperatures have already increased by about 1 degree Celsius relative to pre-industrial levels. And every single year, we emit about 50 billion tons of greenhouse gases into the atmosphere. One of the big challenges, though, is that actually our demand for energy across the globe is increasing. As more countries develop, as more people move into the middle class, we're actually going to need more energy. So clearly the answer to addressing climate change can't just be let's stop using energy. What it really has to be is identifying innovative new solutions to address this challenge. And that's what we're trying to do here.
Okay, so Katie, so you're looking at companies that are developing and scaling solutions, as you referenced, to tackle climate change. But where do you put the criteria for success? How much material difference or material change do these businesses have to create for them to qualify on your radar? Because you talk to any energy business these days, any construction business, any consumer products business, and they will all tell you they are trying to address climate change. So how do you measure the actual improvements and the actual advancements that they are achieving?
Oh, that's a great point, because actually what we are going to need to see is that every company across every industry is going to need to make a change and think about new and different ways that they can still provide the same goods and services, but with a lower carbon footprint. What we're specifically looking at here is those companies that are developing these innovative new solutions. And so we've kind of taken a step back and said, what are the key drivers of greenhouse gas emissions, the key drivers of climate change, and broken them down into 5 different areas. And these are based on the 5 biggest drivers of greenhouse gas emissions: electricity and heat, buildings, transportation, agriculture. And so some of the really innovative areas that we're looking are at companies that are producing renewable energy sources, for example, whether that be wind, hydro, solar power, but also big companies that are really focused on electrification and helping other companies get there and reduce their carbon footprint. Others might be things like electric vehicles or pushing the envelope in terms of the transportation sector, or actually very interestingly in the agriculture sector, an area that you might not think about necessarily, but actually contributes about 1/5 of all greenhouse gas emissions. There we're finding really exciting opportunities of companies that are developing new technologies to help farmers, only fertilize and water the plants that are needed and really help minimize our environmental impact there.
Katie, from an investment perspective, how important is it to align with government policy?
Completely important. So when we think about this shift, we're actually already starting to see the shift towards climate change solutions happen. We're starting to see renewable energy become a bigger proportion of our energy use, for example, and we see a lot of tailwinds here, whether that be the tremendous advances that we're seeing in technology, the really big shift in terms of consumer attitudes, really focusing on more sustainable products. And then finally, to your point, the fact that governments and policymakers are pushing in this direction is going to have a very, very meaningful impact on all the companies that we invest in. And so when we look forward to things like COP26 later in the year and seeing how different governments and policymakers might think about whether that be subsidies for more greener forms of energy or potentially new and different regulations, we need to make sure that the companies that we're investing in are really well positioned to withstand that.
Let me ask you about recycling and reusing, and we've talked a number of times on this program about the notion of the circular economy and companies that design to enable us to move towards more circular practices and to allow things to be recycled more. Where do you see excitement there, Katie? Where do you see businesses that are really managing to either drive consumer change, drive changes in consumer behavior, or get the pricing really right to make these more viable options?
Yeah, that's a great point, because the more and more that we can develop new goods in less carbon intense ways, that's great. But if we can also start to reuse the goods that we already have, that can be even better. So there are a number of different companies that we might be interested in here. Some are focused on, individual consumers' ability to recycle things. So something like a reverse vending, where consumers can take materials that they've used and recycle them there. But it could also be things like reuse of materials, or actually potentially one of the really interesting areas is recycling steel, for example. Steel and cement production are some of the biggest drivers of greenhouse gas emissions. And it's very challenging to find ways to make those goods in less carbon intense ways. And so the more that we can recycle and reuse them, the better that we can all be.
Katie, I just want to quickly get your views on how you cut through some of the noise, some of the hype, how you avoid some of the greenwashing. I've just come back from China. There's a lot of money flow into some of these green projects there, but innovation costs money, R&D costs money, and a lot of these businesses are nowhere close to monetization. So how do you avoid those kind of risks?
Sure. So a couple of different things there. When we think about investing in these strategies, one of the really exciting things is that these opportunities can exist anywhere. They're not relegated to one specific industry or one specific region. And so we really need to find ways that we can uncover these opportunities wherever they exist. And to your point, many of the really exciting innovations can actually be smaller, newer companies that are really pushing the envelope. So we effectively use a two-step process in terms of our investment and security selection. The first is we use a tool that's very much based in machine learning and big data. It helps us scan through and use our data and analytics to look at hundreds of millions of data sources, looking at company reports, broker research, earnings transcripts, news articles, and really narrowing down the list of companies around the globe and across the market cap spectrum that could be involved in these areas. But then the second step, that's where the human element comes in. And we can use our broad range of research analysts, more than 90 around the globe, who are really focused in on sector-specific due diligence, knowing these companies inside and out, and digging into the weeds on, is this actually a company that we want to own? Do they have a sustainable business model? Is that a price that we're willing to pay? And making sure that we're actually comfortable owning every single security that we hold in the portfolio.
Katie, thanks very much. Thanks for joining us. Katie McGee, investment specialist at JP Morgan Asset Management. Coming up on this program, PIMCO co-founder Bill Gross says investors in treasuries are likely to lose money. As we said in our headlines, he's been talking trash about bonds. We'll get to that conversation next. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open, just under 45 minutes into the European trading day. Holding on to the gains across the benchmark, up more than 0.1%. The euro-dollar is currently at 118, just a smidge stronger. US futures also pointing up. Okay, this is what we're watching today. At 10 a.m. we have a Eurozone PPI. At midday we have a Bloomberg webinar with Germany's FDP leader, that's Christian Lindner. At 1:30 UK time we have a slew of US data, including initial jobless claims and factory orders. And over the next 2 days, EU foreign ministers will be having informal meetings. Okay, let's get the Bloomberg Business Flash now with Simone Foxman in Doha. Simone.
Paramount has delayed the release of the Top Gun sequel into next year, with Hollywood continuing to wrestle with the pandemic that has kept many people from the theaters. The film, which stars Tom Cruise, was expected to debut in November, will instead move to May. The studio plans to release it exclusively in cinemas rather than pursue a simultaneous release on the streaming service. Wells Fargo pushed back its return to office plans by 2 more weeks to mid-October. The company, which has the most employees of any U.S. bank, will now start bringing back staffers who have been working remotely starting October 18th. Apple's resolved a long-running dispute with third-party app developers, agreeing to allow links to external websites for customer signups. This means many developers will no longer have to pay an App Store commission of up to 30%. The change is part of a settlement with the Japan Fair Trade Commission, and Apple says it'll be implemented globally early next year. That's your Bloomberg Business Flash. Anna.
Simone, thanks very much. Simone Foxman there in Doha. Now, Bill Gross is talking trash about the bond markets. The one-time bond king says Treasury yields are so low that the funds that buy them belong in the, quote, investment trash can. He also says intermediate to long-term bond funds are in that same trash receptacle. I think we get the picture. Let's talk to Bloomberg's cross-asset reporter, Justina Lee, who's with us. Justina was going to join us. Apparently, she is not available just yet. We'll see if we can establish contact. Now, it's interesting to look at this story, though, Tom, because the gist of it is, he says, you know, long bonds, the yields are so low, they can only go up from here. I feel like we've had quite a few people saying that, and even he has had this view for a little while now.
Yeah, absolutely. There seems to be a consensus that you're looking at around 1.5 by the end of the year. Of course, there's a lot of variation in terms of the forecasts on the 10-year. But yeah, he says the direction for travel for US 10-year is only up.
Okay, well, let's get to Justina Lee, Bloomberg's cross-asset reporter, who is with us this morning. Justina, so that's the gist of his argument. He thinks that bond yields will go up from here. He's not the only voice arguing this. Many people have suggested that bond yields really, can they stay as low as they are with the inflation as high as it is? Take us through his argument.
Yeah, that's right. I mean, a lot of people have said similar things. I mean, he probably just said it with more colorful language, shall we say. I mean, his case is mostly one of supply and demand. You know, on one hand, we're still seeing very strong fiscal spending in the U.S., which means Treasury issuance will still be very robust. And at the same time, he's kind of wondering where the demand is going to come from, Because on one hand, we've heard the Fed talking about tapering asset purchases, and on the other, these yields are not exactly that attractive for private market, in his opinion.
Well, let's expand on that a bit. They're not that attractive. They're more attractive, certainly, than the German Bund, not as attractive of the Chinese sovereign, which is currently, what, about 280 or so. What are the foreign flows looking like into the US Treasury market?
Yeah, I mean, that's exactly right. I mean, in a way, a lot of the, one of the reasons US yields have gone down kind of over the years is definitely foreign demand. But I think, the question for people in like Bill Gross's camp is, if you think that US inflation is going to pick up and monetary conditions can only tighten, then this is not a good time to kind of add to Treasury purchases.
He's also concerned about the supply of Treasuries, isn't he, Justina? He's saying that those things might happen. Governments or central banks might stop buying quite as much Treasury debt as than they are at the moment, just at the time when supply might increase, if governments need to pay back or the governments need to borrow to fund some of the stimulus that they've been doing of late. On the other side of things, though, there are plenty of investors who argue that, look, the Delta variant is still there. That's still keeping people nervous. That continues to, some days, drive money into bond markets. And there are lots of structural reasons in investing, in the investment community, that people still need to get exposure to government debt.
Right, exactly. I mean, I think investors have learned the lesson in like the past decade that, well, at least within that period of time, it hasn't been that wise to be a bond bear. I mean, Bill Gross has kind of been bearish on Treasuries since March, but of course, we've seen yields spike and then kind of like plunge over the summer, and they've only picked up a little bit more recently. And that's been kind of a bit of a mystery, but it definitely shows that sometimes, a lot of technical factors can come in to bolster demand. And at the same time, we've talked about there's still, a lot of foreign purchases. And so, there are also still a lot of kind of macro reasons, maybe to not turn that bearish just yet.
Okay, Bloomberg's cross-asset reporter Justina Lee on the trash talking of Bill Gross. Okay, coming up, we're going to continue our Treasuries conversation as we look ahead to tomorrow's US jobs data and bring you the latest from the markets with MLive's Venram. That's next. This is Bloomberg.
Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the Open, a full 53 minutes into the European trading day, and the picture is broadly positive now. More solid gains of 0.2% across the benchmark. Euro-dollar currently at 118. Joining us now is Ben Ram from our Markets Live team. Ben, you're talking about the insanity of the markets, this call by Citigroup, and how that played out.
Morning, Tom. Yes, indeed. So the Citigroup analyst said that, S&P is not going to do very. Point is, he wasn't too far wrong in the sense that, he said that the markets are overvalued and frothy. And, few would disagree with him when it comes to U.S. stocks. U.S. stocks are expensive by any measure, whether you look at it in terms of aggregate market capitalization, aggregate PE, whatever measure you name it, it's expensive. And all fund managers agree that it is expensive. Still, they don't have a choice because treasuries have lost the plot this year after the first quarter at any rate. And that means there is no real investment alternative, and funds can't be in cash for too long, unfortunately, which means that stocks are being continuously bid. And with the effect that the Citigroup analyst is wrong, but prematurely wrong. I don't think stocks can continue to surge forever and ever. But treasury yields being where they are, I think is wrong for the moment.
Okay, wrong for the moment, right prematurely. It's getting complicated, being right and wrong all at the same time, Ben. Let's think about how those treasury markets that you say have become a little unhinged, how they prepare for the jobs report then that we're expecting to see tomorrow. We've got ADP, the private sector jobs numbers yesterday, but the full picture tomorrow. How do we see treasury markets playing with this?
Well, the ADP report was a bit of a disappointment, but if you look at the NFP report, we've had exceptionally strong reports through June and July. So if the print continues to be strong, and there's been a big median gap in favor of NFP outperforming ADP this year, and if that continues to be the trend, i.e. the NFP continues to be strong, then the rates markets will just take it in their stride and equities will go their merry way, because that just tells the Fed that, look, we are still making substantial further progress in terms of the labor market. However, if the number is a shock print like we saw in April, for instance, less than 300K, I think that, there will be a far bigger move on the downside for yields. And I think that we are asymmetrically positioned in terms of rates.
Ben, do you have a view on what we've been hearing from Bill Gross and his trash talking of treasuries? There's only upside for yields.
Well, conceptually, again, he's right. But let's remember what he said back in 2015. He said that bunds were the short of a lifetime. At that point, bunds were trading at 10 basis points. Look at where bunds are now. It's around minus 40 basis points, minus 0.4%. So, again, it's a question of getting it conceptually right. Of course, treasuries are massively expensive, and no one should be touching them with a barge pole. But there's so much money chasing any investment to be had, and money managers have little choice. So he's conceptually right. Whether it'll actually play out the way he's intending it to, I don't know.
Ben, thank you very much. The limits of being conceptually more right than the markets. Ben Ram from our Markets Live team, thank you very much for joining us. That is it for the European Market Open. Surveillance early edition is up next. European equity markets then have been making modest gains this morning. Futures in the US flat to positive. This is Bloomberg.
What do you predict the Taliban will do in the coming months and years?
I would say, consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world. If you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Considering the existing uncertainty, we should not set in stone this very loose monetary policy stance for too long.
It's a regulatory process that I would expect that it will be a long march, not only in China, also around the world.
One of the jobs of an international bank is to comply with complex laws and sanctions laws wherever they're implemented. And that complexity has increased.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 2nd of September. I'm Francine Lacqua in London, and here's what's coming up on today's program. China continues its assault on tech. Beijing orders Meituan and Didi to rectify instances of misconduct by year-end. Tech names pair gains in Hong Kong. Apple folds on its 30% commission fee for media apps like Netflix after facing global antitrust scrutiny, but it will still collect money on games and in-app purchases. And investment garbage, while erstwhile bond king Bill Gross talks trash about treasuries, rates rebound after initial sell-off. So let's get straight to the markets, and European stocks searching for a direction after fresh regulatory assaults on Chinese tech names really sapped some of the positivity from the markets. Now, this comes after the big U.S. tech stocks rallying yesterday, sending the Nasdaq 100 to an all-time high. The broader S&P was actually a little changed as data suggests U.S. companies added fewer jobs than expected in August. Now, let's get straight to the markets now with our Ritika Gupta. So, Ritika, what are we actually seeing in terms of the China tech bounce back?
Well, Francine, I'm going to start off with just looking at where we are in Europe and the US here. So first of all, looking at Europe, it's shaping out to be a stronger session, up some 0.3%, extending those gains from yesterday. And if we look at S&P minis here, also up nearly 0.2% here as well. That was after yesterday a bit more of a lackluster session for the S&P 500. It was those ADP jobs figures that were weaker than expected. So a lot of focus in on the non-farm payrolls jobs out tomorrow. It really was the Nasdaq that was leading the charge higher yesterday, really by those mega cap tech names. So a hint of defensiveness really coming into this market. And you see that when you look at the yield space, back below 130 on the 10-year. But we do have the likes of Bill Gross and JP Morgan saying that they see yields going to 2%, 1.9% respectively. But we have heard that all before, as you know. And then I point just to crude, taking a look at that, pretty much flat. But we did drop after those OPEC Plus meetings that said they would continue to stick with those hikes as planned. Let's take a look, as you asked, about the Chinese market as well. I take a look at the Hang Seng Tech Index. We did pair some of those rallies. This is after that continued crackdown on Didi and some of those ride-hailing apps. But if you look at the past 4 days on the Hang Seng Tech Index, really have had a pretty strong rally here. We've seen funds coming in from abroad, some pretty attractive valuations. So you're seeing investors coming in and scooping them up here. There's a lot of questions as to where tech in China goes from here, but we have kind of bottomed because there's a question of whether companies learn to live with some of these regulations in the long term. Could industries actually do better with them? But if you look at the August, we had some lows there. We're up some at 19% from there. And from February, where we have a real downtrend, just seem to be now breaking out of that now, Francine.
Ritika, thanks so much. Ritika Gupta there with some of the market moves. Now, two of those companies Ritika just mentioned, Didi and Meituan, part of a group of 11 firms that Chinese regulators have criticized for allegedly disturbing fair competition. Now, they have been ordered to rectify instances of misconduct by December, amping up scrutiny over an industry that employs millions. That comes as Chinese firms rush to embrace President Xi's common prosperity slogan. Now, scores are name-checking the phrase in their earnings, but as companies learn to live with the new era of regulations, the president of Hong Kong's stock exchange sees other countries following China's lead in regulatory reform.
It's a regulatory process that I would expect that it will be a long march. Not only in China, also around the world, because it's an area of a lot of sensitivity, whether it's the data, the privacy of information, whether it's national security, whether it's issues of like how to regulate companies that have monopolistic powers. This is something that we will probably continue seeing.
Now, for more on all of this, we're joined by our chief Asia economics correspondent, Enda Curran, in Hong Kong. Enda, so what exactly, first of all, good morning. What exactly is the significance of the meetings with Meituan and Didi?
Well, it is significant. These complaints this time around, Francine, range around data protection. They're talking about the use of unlicensed drivers. There's a reference to vicious competition that threatens safety. So it's going again to this idea of consumer protection, and that's all about feeding into the broader idea of common prosperity. Remember, China's government now is very serious about getting these technology giants to pay their way and to play their part in making a more equal society and to tackle inequality. And we've seen several big tech companies now, quite apart from making financial payments towards this effort, they're also increasingly referencing the whole government push around common prosperity. So it's certainly looking like a joined-up approach. And this latest kind of slap down of the rideshare companies is an example of that. And they have until the end of this year to get their house in order.
So we also had, Enda, some news on extra stimulus. How important is that?
Well, that's right, Francine. The State Council came out, the equivalent of a government cabinet here in China. They came out and they made this point that the central bank needs to get cheaper loans into smaller and medium-sized businesses. They're talking about $46 billion worth of loans. That clearly speaks to the idea that the authorities do see a slowdown there, and they do see the need now for extra support. There will also be some other measures, such as more local government borrowing to get those infrastructure projects off the ground. And it adds to the idea that the authorities are certainly trying to tackle those sectors that are most exposed to pain. And we know that medium-sized businesses are getting hurt by rising commodity prices and, of course, the whole ongoing supply chain squeeze that's hurting the manufacturing sector. We know there's been a hit to the services side of things as well. But what this isn't, Francine, is it's not a major stimulus. It's just kind of support and a nudge to make sure the economy keeps on track for that 6% growth level at the target that the government has set. And clearly, the overall story is that the economy does remain on track for that target right now.
Enda, thanks so much. Enda Curran, there, our chief Asia economics correspondent in Hong Kong. Now we're joined by Silvia Ardagna, head of European Economics Research at Barclays. Silvia, thank you for joining us. I don't exactly know how economists should view China right now. Is this a possible slowdown that will be managed, given all the complexities of China by authorities, or could it actually, hurt the world economy as a whole?
Good morning, and thanks for inviting me. Look, our view is that this slowdown in China will have marginal impact for the rest of the world. Obviously, China is a very important trading partner for Europe, and foreign demand will be impacted through this channel. But at the same time, we think that the strong rebound in the service sector, given government's reopening of the services, contact activity firms, is going to be the first order important factor. What is relevant also for European economies and clear the global economy is the fact that the Chinese government is imposing restrictions to reduce the spread of the virus, and this can add up to supply-side bottlenecks that we see already.
Silvia, what's your main concern when it comes to the world economy? So I know, we talk about the Delta variant, we talk about, possible resurgent virus, vaccination rates. Supply chains is probably the big unknown that could filter through inflation or not. Like, what are the bottlenecks of these supply chains, and how long do you think they'll last?
Certainly, this is quite relevant at the moment. As at the time being, we think that this can last into the first half of next year, given that the virus in developing countries is clearly not under control. However, we still think that these effects are going to be temporary. So yes, temporary, that is longer than a month, it becomes to be a concern. But we think that the monetary authority will still look through this, because as the pandemic gets more under control and economies reopen, the supply chain bottlenecks should gradually ease. And it's interesting that the latest PMI service for Europe shows some easiness of the supply side bottlenecks.
So what does that mean for your, inflation expectations? I don't know whether I ask you about the US or just, inflationary pressures worldwide filtering through the US.
Well, we have revised upward, for example, our inflation forecast for Europe for the next few months to account for the impact of supply side chain. Inflation is likely to remain higher in the US as well, and to go down gradually in Q2, for example, in Europe next year. So it has an effect, but we don't see it having a second round effect. What means is that we don't think that at the moment this supply side effect on current inflation are feeding through inflation expectations for the medium term, nor into wage dynamics.
Silvia, thanks so much. Silvia Ardagna there from Barclays stays with us. Coming up, ECB policymakers spar over ending stimulus amid a rise in inflation in Europe. So we'll discuss that next. And don't miss our exclusive interview with the HSBC Chief Executive, Noel Quinn. It's tonight. You can catch it first. The full interview on the Bloomberg terminal starting at 11 p.m. London time. Then starting at midnight, clips will, of course, appear on Bloomberg TV and Bloomberg Radio and all of our other platforms. It's one of the very first times that actually Noel Quinn sits down with any journalist since he's become chief executive. This is Bloomberg.
The July jobs report was strong.
This is an across-the-board favorable report.
More money, more hours, and more people working.
Wages up.
We're seeing our economy moving forward.
Unemployment down.
The unemployment rate declines by 0.5%.
But will Delta hit the brakes on the momentum?
We could still see the consumer become a little bit more skittish.
A lot of kind of negative surprises focused really on the Delta variant.
Tune in for the August jobs report, Friday on Bloomberg Television and Radio.
Wir sollten eben auch das Risiko. We should also not ignore the risk of excessive inflation. Considering the existing uncertainty, we should not set in stone this very loose monetary policy stance for too long.
Well, that was Jens Weidmann, of course, of the Bundesbank, weighing in on intensifying debate over when to end stimulus ahead of the ECB's policy meeting next week. Now let's get back to Silvia Ardagna from Barclays. Silvia, a number of the hawks actually came out in the last couple of days saying we need to talk about tapering, we need to start normalizing, and we certainly need, some of them say, to start normalizing, especially the things that were put in place because of the pandemic. I mean, how do you see the ECB operating in this?
We agree that the stimulus that is provided via the PEP pandemic program is going to be scaled down at this meeting. We expect that, we have expected that in a long time, but we disagree with the fact that this has to be interpreted with a proper tapering, and we think that the monetary policy stance will remain loose for long because, as I was saying before, this spike in inflation is likely to be transitory. So in our view, the ECB will scale down the PEP at this meeting, but will also hint that when PEP ends in March, there will be a recalibration of the normal APP program. It will be important to look at the inflation forecast because these in the medium term, so the inflation forecast for 2022, 2023 in particular, because this will signal that inflation will be still quite low in the medium term from the new 2% objective that the ECB has set.
Silvia, is there, I don't know whether there's a danger or concern or just something we need to look at, but what we saw from the Bank of Korea actually hiking rates, that was last week or maybe 10 days ago. Are we going to see, smaller open central banks starting to do that? And will it put extra pressure on the ECB and the Fed to start moving?
Look, I don't think that the small central banks put pressure on ECB or the Fed. I mean, after all, these central banks manage their own domestic economies, and we have a large, close economy, particularly for the US. It is true that some central banks have already started the hiking cycle, but clearly they have different growth or mainly inflation situations that what we have in Europe or what the US has. And Europe and the US are at different stages of the recovery. We completely agree with the president of the ECB that has in the past highlighted that repeatedly. So the Fed in our forecast will announce tapering at the September meeting. We don't think that the scale down of PEP should really be interpreted as tapering for the euro area, but just as a reduction of this emergency program that will then still leave monetary policy loose for long.
Sylvia, one of the things I love the most is when actually viewers write in and they ask me to ask you questions. So please, everyone who's watching, Sylvia's one of the smartest economists we have on, so please ask as many questions as you want. Sylvia, this person's writing in, and this kind of touches on current affairs, but it's also about security, access to the energy. So this person writes in, with the current affairs in the Nord Stream 2, how does Sylvia see this affecting trade across Europe?
Well, this is clearly a very interesting question. I would say outside the scope maybe of what our research has done, but we see trade in the euro area being still a very important channel for economic activity. Clearly, as I was saying before, trade will, export are likely to be affected more by the pandemic in the near term than by any of these other concerns. It will be important when we look into, next year and the future. what stance also the new German government can take on foreign affairs, but again, might be too soon to say. The uncertainty is high on this front, even on what kind of coalition agreement we will get.
Yeah, I was going to ask you also about, Germany, Sylvia. We have big elections also in 7 months in France. How difficult is it, to have a unified economic forecast for Europe where it's such a big 12 months ahead?
I mean, there are uncertainties that any elections poses to the fiscal policy stance, but in our baseline view, even different German coalition are going to play a difference at the margins on the fiscal policy stance, but clearly we will not see for 2022 or 2023 any transformation into the main fiscal policy picture that we will have in the European area. And this is particularly obviously for 2022. The new government will do, mainly the 2023 and onward budget. But in our view, fiscal policy will remain expansionary across the euro area, but the amount of support will be gradually scaled down with the improvement of the economic outlook. We are luckier in a sense this time that we have the NGU, and so this fiscal facility that is at the European level, which is about to last for 6 years. So at least this is insulated by the current elections affairs in the various European countries.
Sylvia, thank you for that. So let's also listen to what PIMCO co-founder Bill Gross has dubbed the bond market investment garbage. He said in his latest investment outlook, cash has been trash for a long time, but there are now new contenders. Intermediate to long-term bond funds are in that trash receptacle for sure, but will stocks follow? Sylvia, how much do you look actually at market activity to try and figure out what the markets understand differently to economists?
Look, clearly, the market in the past, few sessions have been more concerned maybe than our economic narratives, and this might be, certainly a reflection of the virus not being under control and fear of supply side bottlenecks feeding into inflation, maybe reassessing the probability of tapering in the US. But having said that, treasuries are still quite low in absolute levels, and I think the improvement in the US economy and global economy is clearly undeniable, and so maybe markets are also beginning to take stock of that.
Sylvia, thanks so much. Sylvia Ardagna, their head of European economics research at Barclays. Now, coming up, a first look at Bloomberg exclusive. We'll hear from our interview with the HSBC chief executive, Noel Quinn, in his first since taking over the role. That's coming up shortly, and this is Bloomberg.
markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kayleigh Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
One of the jobs of an international bank is to comply with complex laws and sanctions laws wherever they're implemented. And that complexity has increased, but we'll navigate that as we have done so far, and we'll continue to do so going forward.
HSBC Chief Executive Noel Quinn there speaking to us exclusively, and you can catch that full interview first on the Bloomberg terminal starting at 11 p.m. London time. Then starting at midnight tonight, you'll see it on television, at Bloomberg Radio as well, and all of our other platforms. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. New York and New Jersey have declared states of emergency due to record-breaking rains as the remnants of Hurricane Ida pummeled the region. Manhattan's Central Park got 3 inches of rain within just 1 hour, while Newark Airport in New Jersey got more than 6 inches in 3 hours, roughly the equivalent of 7 weeks of average rainfall. The flooding has halted train services, downed trees, and even swamped the streets. Now, the U.S. Supreme Court refused to block a Texas law outlawing most abortions after 6 weeks of pregnancy in a 5-4 ruling. The rejection marks a watershed moment, allowing a law to stand that is at odds with previous rulings that protected abortion rights until much later on in the pregnancy. The order hints the conservative court may be ready to overturn the landmark 1973 Roe versus Wade ruling. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, coming up, Apple and Google are facing refreshed global antitrust scrutiny over their market dominance on mobile platforms. We discuss the implications of this next. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
China continues its assaults on tech. Beijing orders Meituan and Didi to rectify instances of misconduct by year-end. Tech names pair gains in Hong Kong. Apple folds on its 30% commission fee for media apps like Netflix after facing global antitrust scrutiny, but it will still collect money on games and in-app purchases. And the chief executive of the Hong Kong Stock Exchange sees China's regulatory reform continuing and governments around the world following suit. This evening, we'll also hear from my exclusive interview with the HSBC chief executive, Noel Quinn. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it's all about data out of the U.S. tomorrow. That's the big one, and it's U.S. jobs. But right now, we did have a bit of a wobble just because of what we saw in Asia. This is on more regulation hitting tech stocks. Actually, tech stocks in Asia not doing too badly at the moment. This is a picture for Europe, so you can see the European stock 600. Tentative gains, I would call it, 0.2% higher. The focus is a lot on the travel stocks, for example, as there does seem to be a bit of buoyancy now in economic prospects, that the Delta variant has been a concern, but actually won't really derail the economy. That's the juxtaposition with concerns about inflation. Nasdaq futures also holding on some of the gains. I love the 10-year yield. We'll spend a lot of time talking about Bill Gross, talking treasuries are trash, 129.70, and Bitcoin. Always look at Bitcoin. It's gaining over $50,000. Now, let's turn to China. Didi and Meituan are part of a group of 11 firms that Chinese regulators have criticized for allegedly disturbing fair competition. Now, they have been ordered to rectify instances of misconduct by December, amping up scrutiny over an industry that employs billions. The changing regulatory environment is also top of mind for another big company in the region, while Hong Kong's exchange chief executive spoke exclusively to Bloomberg's Stephen Engel about China's regulatory reform and its impact.
The regulatory reforms that we're seeing in China is something that we're going to see continuing for quite a bit of time. But it's not only China. As it relates to data, as it relates to big tech, it's a regulatory process that I would expect that it will be a long march. Not only in China, also around the world, because it's an area of a lot of sensitivity, whether it's the data, the privacy of information, whether it's national security, whether it's issues of like how to regulate companies that have monopolistic powers. This is something that we will probably continue seeing.
We heard in July that perhaps listings that will come to the Hong Kong Exchange will have less of a cybersecurity review than, say, those companies that go to the United States. Is that a fact, and how is that affecting or potentially boosting listings here?
Yeah, I think it'll be consistent all around. I mean, the rules will be applied consistently.
Consistently with those going to the U.S.
around
and Hong Kong?
Any companies that they will, yes. I mean,
so Hong Kong will not have that advantage?
I don't think that will be the advantage, because, I mean, essentially the companies will need to make sure that they protect their data, that they are confident that that data is secure. It cannot be permeated to other areas. So, I mean, the likelihood of having that as a very, very specific advantage, I think it's very low. I mean, I would think that there will be a consistent application of the rules and regulations.
Now, we're hearing from the likes of Citibank and other analysts saying there's about $637 billion of market cap of Chinese ADRs potentially who have not come back to Hong Kong, have not returned onshore back here to Hong Kong. What are you seeing with those companies that were thinking of a U.S. listing, like Xiaohongshu, among others, Lala Move? Are you seeing that pipeline increasing, given that there's a lot of companies that potentially would find regulatory scrutiny in the United States too difficult and would want to come back here?
I mean, absolutely. We've seen quite a significant increase in terms of inquiries. And companies that were originally thinking about the U.S. are now inquiring about Hong Kong. Some of them have already switched and started focusing on Hong Kong. I mean, part of this is the regulatory pressure from the U.S. in some cases as a result of the accounting disclosures and the needs. Others feel that, I mean, it's easier to be closer to their home market. So it's a combination of things. And I would expect that in the medium term, we'll probably have companies listing in both venues. I don't think that it's going to be all Hong Kong, and I think that's actually healthy for the market.
What about longer term?
Yeah, same thing. I mean, medium term, long term. In the short term, probably there'll be more towards Hong Kong. Medium to long term, I think it'll be a balanced, approach.
The Hong Kong Exchange Chief Executive Nicolas Aguzin there, speaking with our Chief North Asia Correspondent Stephen Engel. Now, Apple will allow app developers to link their software to external websites for payments and avoid a 30% fee. Now, the announcement comes at a time of rising global antitrust scrutiny of Apple and Google's dominance on mobile platforms. On Tuesday, a new bill was also passed in South Korea. The U.S. Justice Department may file an antitrust lawsuit over Google's digital ad practices as soon as the end of the year. Well, joining us now to talk about all of this is Bloomberg Intelligence's Matt Blocks. And Matt, you always make us smarter on this. Now, this feels like a really big deal because in the past, you basically, if you bought an app through the Apple Store, Apple automatically got 30%. No longer the case, but for a select few app stores. Is that right?
Yeah, that's right. So it's only for what they call kind of reader apps. So kind of publishing, includes things like Netflix and Spotify, but also kind of magazines. It only accounts for maybe about 10 to 15% of the revenues they generate from their in-app purchases. So it's a relatively small amount. And I think for people like Netflix, not that significant in the short term because they've pushed their subscribers to pay on their own platform. But going forward, Netflix has said they want a much bigger share of the mobile market. So this may help them to kind of offer different ways of actually buying the app and using the service going forward. So yeah, it's short term, not a big impact really.
But could it have an impact longer term because we're going to see more regulatory scrutiny on Apple?
That's right. I mean, as you said, we've seen a move in South Korea. This was in response to a similar investigation in Japan. India's opened an investigation. There's this new US investigation. So I think it's a part of a long-term theme that the dominance that Apple, Google, and others have enjoyed is being attacked by regulators because there simply isn't the competition to do it through market forces.
I mean, is it going to be the Asian regulators, European ones, or are we seeing more things in the U.S. because of the Democrats?
I think it's all of them, and it's just simply, which door opens first, really, that kind of forces a change. It's interesting that Apple's doing this on a global basis in response to a specific Japanese investigation. So I think, perhaps we might see something in Europe next year which will force a similar global change in a different area. So I think it's just going to probably be specific country investigations that force these global changes over the next few years.
Matt, what about Google?
Yeah, well, it's a kind of similar thing, really. I mean, they're hugely dominant in the ad tech market. This new investigation is around ad technology, so how they help advertisers and publishers kind of come together to make that market. They probably take about 30% or so of that global digital ad market, so they're strong together with Facebook.
The figures are incredible.
Them and Facebook together is 50% at least, so they're kind of really quite dominant. So it's a similar issue. It's all about platforms. That's just a different type of platform. They have an incredibly strong share. As an advertiser, you wouldn't think of not advertising on a Google platform. So again, it's this issue of control, and not so much that you're dominant. It's whether you're abusing that dominant position. So that's what the investigation is going to look at. So I think you may well see more voluntary concessions from Google over the next year or two to kind of avoid a kind of harsher regulatory imposition of rules. loans.
So, Matt, what's going on with regulators? I mean, have they always tried to regulate, cases like this, or is it that the tech companies have become bigger, or that regulators have become smarter about what they actually do and how they operate?
I think the regulators, as is often the case, are catching up with what's happening in the real world, and I think because the digital companies have become so powerful, they've been kind of forced to act. I think historically the kind of tools they've got to work with as regulators haven't really been fit for purpose for the digital world, and they're scrambling to adapt what they've got and to create new legislation to reflect the reality of the world we're in today, which is these huge dominant tech companies.
Matt, thank you so much. Our Matt Bloxham there from Bloomberg Intelligence on all things tech. Now, coming up, can diamonds be ESG's best friend? Well, we'll discuss why lab-grown diamonds may not be the green way forward for the traditional mining industry. This is Bloomberg.
Session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Wells Fargo has pushed back its return to office plans by 2 more weeks to mid-October. The company, which has the most employees of any U.S. bank, will now start bringing back staffers who have been working remotely starting on the 18th of October. Shares of Netflix rose to its highest since January on the announcement that the platform will be streaming popular sitcom Seinfeld starting on the 1st of October. The debut of the famous show about nothing has been long awaited. Netflix won the rights to all 180 episodes in 2019, and Bloomberg Intelligence writes the show's arrival may be a key catalyst for user growth. And Paramount has delayed the release of the Top Gun sequel into next year as Hollywood continues to wrestle with the pandemic that has kept many people from theaters. The film starring Tom Cruise was expected to debut in November and will instead now move to May. The studio plans to release it exclusively in cinemas rather than pursue a simultaneous release on a streaming service. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, the diamond mining industry has not been short of sustainability criticism. According to Alrosa, the world's largest diamond miner by volumes in carats, there's a growing misconception that lab-grown diamonds are the industry's green solution. Pandora recently announced it would sell exclusively man-made diamonds. But Alrosa argues synthetic diamonds are not a sustainable replica of the natural mined mineral. Well, we're now joined by Alrosa's independent director, Maria Gordon. Maria, thank you so much for joining us. Now, this is, a part of the industry that a lot of people are trying to read up on to try and get smarter. Why do you believe that they're not as green as maybe expected? Is it the amount of energy, the amount of water needed to create them, or are you pushing for another solution?
Look, industrial disruption clearly is an important dynamic, and lab-grown diamonds are part of that. It's one that may potentially reap ESG rewards, but as we know that some of these new players, their driver is not primarily economic. I would compare that a little bit to Bitcoin enthusiasts who pretend they could liberate the world from the constraints of fiat currency. We now know from the Bitcoin story that the cost of the digital mining could devastate the earth. So similarly here,
but Maria, I mean, there are not mines where you do dollar and euro. There is a line of people saying that actually you have blood diamonds because it leads to war, because it leads to warlords, because it's people going in the mine at great personal risk. Something that actually you don't see with Bitcoin.
Yeah, I would actually question that the diamond industry in the past 20 years has done a tremendous amount of work through the kimberlite process to make sure that we can show that the diamonds are responsibly sourced and produced. We are working together with De Beers, or separately with De Beers, but in line with De Beers on the nanotechnology to make sure that every diamond, we have made a commitment, De Beers has made the commitment that by 2030, they will be able to show the provenance of every diamond that has been mined. So I think that that is largely the issue that clearly, painfully, the industry had to face and has done with very well. Now, with the energy consumption, a recent report by S&P True Cost shows that the diamond, artificial lab-grown diamonds, takes 350 kilograms of emissions to produce 1 carat. And that is potentially a lot more than what we do. Now, we are working on a very, very exciting research report that shows that there is a big potential for offsetting diamond mine carbon emission through carbonization of processed kimberlite. To put it simply, the tailings, the kimberlite tailings that remain after the process of mining bind with the CO2. And our preliminary findings show that we emit 2.5 times less than the ultimate goal.
Maria, so Alrosa, mines the natural diamonds. There's concern, you have concerns about the ESG credibility of these man-made diamonds. How much do man-made diamonds actually take away in terms of revenue from Alrosa? Do you see a split? How many more people are now buying man-made also because they're cheaper?
Look, there is clearly a very aggressive appropriation of ESG credentials. However, that industry remains very niche and very small. The prices of lab-grown diamonds have been on decline, given that there is a realization that it's an industrially produced good. So it's not a threat. We are clearly saying that the aggressive appropriation of ESG credentials is not appropriate. And if you wish, Francine, if we were to look broader in the ESG, through the ESG lens, we are facing the era of accountability, or new accountability for making the statement. So again, turning back, we need not to replace the earth, but to work to improve the earth. And I think the diamond industry, given its resources, is working extremely hard to make sure that we, mine responsibly. 95% of, for example, the water we use is recycled. 90% of energy.
I mean, you talked a lot about the Kimberley, process certification scheme. How many of the world's diamonds are mined in that way?
Over 90%. So clearly,
and
it's
a certified,
highly consolidated industry where De Beers and Alrosa mine in totality some 70%. So it is easier to trace and control. So again, Francine, this is the issue that clearly was a big issue for the industry to face, and it has faced it responsibly over the past 20 years.
Yeah. All right, Maria, thank you so much. Maria Gordon there, Alrosa's independent director, and of course we're also reaching out for comment from the man-made chiefs of some of these diamonds. Now, coming up, sticking to the script, OPEC Plus sticks to its planned production hikes. We'll get the latest on what it means for oil markets next. This is Bloomberg.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at the frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
One of the jobs of an international bank is to comply with complex laws and sanctions laws wherever they're implemented. And that complexity has increased. But we'll navigate that as we have done so far, and we'll continue to do so going forward.
HSBC Chief Executive Noel Quinn there speaking to us exclusively, and you can catch the full interview first on the Bloomberg Terminal starting at 11 p.m. London time. Then, starting at midnight tonight, clips will also appear on Bloomberg TV and Bloomberg Radio and all of our other platforms. One of the very first, and actually the first interview since he became chief executive. Now, OPEC Plus avoids any drama. The group has agreed to stick to their existing plan for gradual monthly increases in oil production. It will bring 400,000 barrels per day of new supply from October. Now, the rapid meeting was a stark contrast to the drawn-out negotiations seen in July. Let's get more from our Bloomberg executive editor for energy and commodities, Will Kennedy. Will, thank you for coming on. It was smoother, actually, than we thought it could go. Is there some kind of alliance now, or do they just have better visibility about what the future looks like?
I think they were confident in raising production for a couple of reasons. Earlier in the summer, they got very worried about demand as Delta spread through the world, especially in Asia, which is the heart of global oil demand. Those fears have dissipated somewhat. Demand is holding up well. We saw some astonishingly strong demand numbers from the US yesterday, the EIA reporting a broad measure of product demand at an all-time high. And that gives them a lot of confidence that the global market is doing well, the economy is performing strongly, and needs more oil. And the other fact that we're given confidence is that there's still little sign of Iranian barrels coming back into the market. Those nuclear talks in Vienna appear to be in a bit of a quagmire. There's no Iranian oil likely in the next couple of months, so I think they all felt like it was a good time to keep raising production.
So, well, I mean, did it transpire that they felt like they had better visibility on the world economy, or just in the shorter term?
Look, they're meeting every month, Francine, which I think gives them a lot of opportunity to carefully calibrate policy on the short term. So, you know, if there is a sudden slowdown, they could change course. But right now, I think they are confident that the oil market is headed their way. I think one other thing that the market's increasingly going to focus on after this meeting is the extent to which every member can meet its commitments to raise production. Our tanker tracking survey yesterday showed that actually OPEC exports fell in August as some countries kept crude at home or didn't keep pace with their increases. And you know, there are some countries in places like West Africa where the oil industry has taken a big hit from the COVID crisis, where it's not entirely clear that they can keep raising production. So it's all very well having OPEC having these targets. I think one thing we're going to be talking about over the coming months is to what extent they can meet them.
Well, what can you tell us about Ida? So for the first time, I think, in a very long time, there was a state of emergency also declared, you know, around New York. Does that impact, I mean, is this kind of thing, you know, it's not disruptive to oil at the moment, but is there any repercussions on that?
I think clearly there's going to be a lot of disruption to people moving around the New York area. It will probably have an impact, a very short-term impact on how much gasoline people use, but it may disrupt the supply of gasoline places in Louisiana after the hurricane. We've seen some gas stations run short, and it's possible that might happen in other parts of the country. And of course, it may well have had an impact on power supply. That will become clearer this morning.
Well, thank you so much, Will Kennedy, there, of course, in charge of energy and commodities. Now, this is what the markets are telling us. When I arrived in the newsroom a bit earlier on, well, actually a lot earlier on, about 5-6 hours ago, there was definitely a sell-off in technology stocks, especially in Asia. Now we've seen a little bit of a turnaround. This is partly because of some of the belief that the recovery will stay firm. European stocks now posting modest gains. U.S. equity futures cautious, but still on the rise. Now, this is the day before key U.S. jobs data. So that will shape bets on the path of Federal Reserve policy tightening. So that will have, of course, the biggest impact on the markets that we've had certainly this month. Well, not this month, but in the last 30 days. I always forget that it's September 2nd. Travel firms actually leading the stock 600 higher for a second day. Consumer non-cyclical and miners down. The 10-year U.S. Treasury yield steady at around 1.3%, and dollar holding a drop. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kaylee Lyons out of New York. Don't miss our exclusive interview with the HSBC Chief Executive, Noel Quinn. That's tonight. You can watch the full interview first on Bloomberg, on the Bloomberg terminal starting at 11 p.m. London time. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
The dollar is going to be one of kind of the messier stories because it's kind of in that battle between the safe haven and the growth and the recovery pictures.
One thing you don't want to do is to be out of the market. We do still see equities rising.
When policy in its various guises steps away from the US, from any major economy, the economy literally has a heart attack. So without temporary inputs from policymakers, the current state of the economy is unsustainable.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, September 2nd. Our top stories today. President Biden vows to stop Russian aggression. He assures Ukraine's leader that the U.S. is committed to the country's sovereignty. State of emergency. New York and New Jersey are swamped by torrential rains caused by remnants of Hurricane Ida. And OPEC Plus bets on improving demand. The cartel and its allies stick with a plan to increase oil production. We'll talk with the global head of commodities research at Goldman Sachs, Jeff Curry. Now, we'll, of course, look at inflation through that commodity lens. Kaylee, so I came in today and actually stocks were lower because of concerns about extra regulatory crackdown on Chinese tech stocks. And now they're kind of undecided. I wonder whether they're just waiting for that U.S. jobs report tomorrow.
We're all waiting for that jobs report tomorrow morning, Francine. 8:30 a.m. Eastern time on Friday. You definitely don't want to miss that number. But to your point about Chinese tech stocks, yes, regulators exercising a crackdown once again on ride-hailers like Didi, and yet the Hang Seng Tech Index largely shrugged it off. That said, it wasn't an overwhelmingly positive Asian session. You did have stocks lower in South Korea and Taiwan. Japan, though, did close higher by about 0.3%, while that Hang Seng Tech Index actually rose about 1.5%. So that rally continues. And of course, also lending support to Chinese equities more broadly is the PBOC pledging support for smaller businesses, which of course is support for the economy. And support for the Chinese economy is also a good thing for industrial metals demand. And as a result, you did see aluminum reaching a fresh decade high in the London trade, those futures up about 1.1%. I also wanted to point out in the bond market, New Zealand bonds, that 10-year yield is at 1.93%, which is the highest going back to April of 2019 on a closing basis. And in other asset classes, the South Korean won is your big underperformer in Asian FX, weaker against the dollar by about 0.3%. Now, here in the U.S., futures are in positive territory. Of course, it was big tech that led the way yesterday. We will see if that's the case again today. But right now, S&P E-minis up by about 0.25%. Not a whole lot of movement going on in the bond market, though. The U.S. 10-year yield still just shy of 1.3%. The dollar is weaker, and that may be helping oil off of session lows. WTI now up about 0.3%, even in the face of more supply from OPEC. They are sticking to their plan, Matt. Right now, WTI is trading at $68.82 a barrel.
Yeah, it's interesting to see such little movement in oil and to see it to the upside after you have all this supply come back online. Let's take a look at what's going on in Europe. You can see here we have green across the screen and not huge, bright green. In fact, in London, markets are little changed, but it is a broadly better day. The stock 600 is higher as we see most of the national indexes climb. Take a look at the bunds. You can see the yield is coming down a little bit, but still with 3 handles. So still at a different place, really, than we have been the last few weeks, trading at negative 38.5 basis points. The euro stronger against the dollar, as is the pound, but not a lot stronger. I think the markets really, Francine, are waiting for this jobs number, as you and Kaylee were talking about, waiting to see what kind of signals the Fed is going to be plugging into its model going forward. That's really the only thing that matters until we get any kind of tax legislation through.
The only thing that matters, I couldn't agree more. The other thing that matters, at least especially to 200,000 households in the U.S. that are now without power across the Northeast, is the remnants of Ida ripping through New York, New Jersey, and across the Northeast. So a lot of people, I know, Kaylee, haven't been able to come to work. I mean, some of the videos of the flooding posted on social media is showing major thoroughways, airport terminals, baseball stadiums, and also subway stations, turned into pools.
Yeah, it has been quite dramatic in many areas, Francine. I will say anecdotally, my commute from lower Manhattan up the east side to here at Bloomberg headquarters was actually okay this morning. The east side of Manhattan not doing too bad, but if you're in the outer boroughs or coming in from New Jersey, that is where you might run into a problem with your commute this morning, Matt.
Yeah, well, I'm glad I'm not dealing with that right now, but if I were, I would have a gigantic truck with huge 37-inch tires and just plow straight through it, although I'm not sure if I would need an amphibious vehicle, Francine, because it does look like the flooding is pretty deep.
Yeah, maybe a submarine. This is what else we're looking at today. China's President Xi set to speak at a services trade summit in Beijing. Investors will be watching the comments closely for any hints on regulatory moves. President Vladimir Putin begins a 4-day visit to the Russia Far East for the Eastern Economic Forum. EU foreign ministers meet in Slovenia for informal discussions. They're expected to discuss the bloc's role and position in the world. And we also get some U.S. economic data, including trade balance and initial jobless claims. Now, over to Washington, and President Biden has assured Ukraine's president that the U.S. would counter Russian hostility towards his country. The two leaders met for the first time on Wednesday at the White House. Let's get straight to Jack Fitzpatrick, Bloomberg government reporter, joining us from Washington. Jack, this was almost a litmus test to see how the U.S., after the retreat from Afghanistan that had a lot of allies worried, would deal with Russia.
Yeah, and there really wasn't anything surprising. In fact, this would be maybe less of a newsworthy meeting, if not for the recent history of the back and forth between former President Trump and Ukrainian President Zelensky and the temporary withholding of U.S. aid to Ukraine. The meeting went as planned. There wasn't a massive amount of news other than pretty standard promises of U.S. backing for Ukraine and sort of a broad promise of pushing back on Russian influence. That is not a surprise. Even in what we see in Afghanistan, Biden has made it pretty clear that a little bit of less of a focus on the Middle East, more of a focus on pushing back against Russia, and obviously a focus on China are the basics of his foreign policy agenda. So this was probably mostly newsworthy just for the fact that the meeting happened without anything going wrong after all the drama that we saw in the last presidential administration.
So, Jack, that's the executive branch. Let's talk about the judicial, because the Supreme Court last night, 5-4 vote, refused to block that Texas abortion law, banning abortions when you can hear a heartbeat around 6 weeks. This is a break from precedent for the Supreme Court. What are the broader implications even beyond Texas?
Well, this could very well potentially conflict with Roe v. Wade, and the concern is that this is a sign that the court decided to stay hands-off, not on the merits itself. This is the decision by the Supreme Court to not issue a stay and not block in the short term the Texas law until they actually rule on the constitutionality of it. But the apparent conflicts with Roe v. Wade and the underlying assumptions that women have a right to get an abortion in the U.S., that's the issue. And it's really reflective of the concerns that you've heard on the left about the rightward drift of the Supreme Court, with particularly the Brett Kavanaugh and Amy Coney Barrett confirmations under President Trump. So there's not a lot that Congress or the executive branch can do there right now.
Jack, thanks so much. Jack Fitzpatrick there of Bloomberg Government Reporter. Now, in tech news, Apple will allow some app developers to link their software to external websites for payments and avoid a 30% fee. Let's get more on this with Matthew Bloxham of Bloomberg Intelligence. Matt, I mean, this is basically about regulators cracking down, Apple trying to do something about it.
Yeah, that's right. And this is specifically in response to a Japanese Federal Trade Commission review. And it'll come into force next year. It affects about 10 to 15% of the revenue that Apple generates from its App Store. So it's a relatively small amount, but yeah, it's an important step forward. And there's a lot of investigations going on across the world into Apple, Google, and other tech giants. So I think we're going to see a lot more of these coming. And actually, I think India's just opened a similar investigation for that market.
Well, we have another suit coming for Google, apparently.
Yeah, that's right. An investigation into their digital ad business, which is obviously the vast majority of their revenue, and they're a very dominant player in that market alongside Facebook. So again, I think it's a similar theme. These are all platforms. They've all got an incredibly strong position in the market, dominant. I think it's a question about whether they've been abusing that dominance and what the best approach going forward is. We could see tougher regulations. We could see big multi-billion-dollar fines. I think in most cases, the big tech giants are going to shift their practices to kind of head off the most severe penalties they may face.
Matt, thanks so much. Matthew Bloxham there at Bloomberg Intelligence. Now, Bill Gross is trash-talking bonds. Bloomberg's Ritika Gupta has more from the one-time Bond King's latest outlook. I mean, he says they're trash, Ritika.
Yeah, he does, Francine. He says the bonds are investment garbage, just like cash. And he says with yields sitting so low, we're just shy of that 1.3% level on the 10-year, that the funds that essentially buy them are essentially, well, worthless. Now, we know he's been a bond bear for a while now. He sees the 10-year going to 2% in a year. He really says there's nowhere else to go but up. And JP Morgan have also, he's not alone here, they also see the 10-year going to that 1.9% level. But he really points to those supply and demand side dynamics, the Fed playing a big role here now that it starts to taper, because, of course, they make up about 60% buying of that net Treasury issuance. And he also points to the fiscal deficits that we have that are at least $1.5 trillion. So he says on those grounds that Treasury issuance will remain elevated.
All right, so Bill Gross says you can't buy bonds. Does he think you can buy stocks here, Ritika?
Yeah, Kaylee, he says that really stocks could also go in that garbage can. That's if we don't get earnings that are in the double digits. And this comes really at a time when we do see concern about lofty valuations on the S&P 500. If we actually look at the valuations, they're the highest going back to the year 2000.
All right, Bloomberg's Ritika Gupta, thank you so much. And I want to stick with the markets now and take a look at some stocks moving in pre-market trading here in the U.S. One of your outperformers to the upside is ChargePoint, of course, an EV charging company, up 11% in early hours after raising its forecast after the bell last night. Jefferies calling both the second quarter and that guidance strong, so that stock is getting a lift. To the downside, though, 5 below, the discount retailer also reported after the bell its second quarter revenue missed expectations. As a result, that stock is down 9% in early hours. And finally, one more company, Chewy, of course, the online pet supply retailer, somewhere I might shop if my new husband lets me get the puppy. Jury's still out on that. It, however, gave a disappointing outlook. The company's CEO, it's still out. Stay tuned. I will have updates frequently. The company's CEO says it's still really hard to judge consumer behavior and demand because of the pandemic. Investors don't like to hear that, so that stock also down 9% before the bell, Francine.
Yeah, I feel like I'm, taking out a second mortgage just to pay for my puppy's new food. And also, once you're married, you're in charge, Kaylee. That's just right. Bottom line. So you are definitely getting a puppy. Coming up this hour, Jeff Curry, Goldman Sachs' Global Head of Commodities Research. We'll talk oil, and of course, we'll talk energy in general. And then a little bit later, an exclusive interview with the HSBC Chief Executive, Noel Quinn. One of the first times he's speaking since he became, Chief Executive of HSBC. You can watch the full interview first on the Bloomberg Terminal, starting at 5 p.m. in New York, 10 p.m. in London, and then an hour later on Bloomberg TV and Bloomberg Radio. Here's a quick preview.
One of the jobs of an international bank is to comply with complex laws and sanctions laws wherever they're implemented. And that complexity has increased. But we'll navigate that as we have done so far, and we'll continue to do so going forward.
after 15, 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever, are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacroix in London and Kaylee Lyons in New York. Now, even though we continue to hit record after record after record in the stock market, certainly on the S&P 500, that doesn't mean that investors aren't hedged. In fact, if you take a look at the put-call ratio, it is near the highest level that we've seen it in years. Here is a chart for those of you on radio. I'll just go ahead and walk you through. Welcome. Thank you very much for joining us on this. Wait, is it Thursday? It's Thursday?
Yes,
Thursday.
it is.
On this Thursday,
September 2nd.
we're up as you can't see, but those of you watching on television can see. We're up at the highs that we saw at the beginning of 2020, at the end of 2018, beginning of 2019. So investors are prepared for any downside if it may come. Not through shorting, obviously. That's out since the Reddit crew joined in, but we are seeing people hedge in a number of ways, and the put-call spread is one of the ways you can see it. Francine?
Miller, as your personal calendar assistant, how am I doing?
You're doing great in so many different ways, but yes, also that.
Let's get straight to Noor Ali, Bloomberg Markets live editor, to talk about the great terminal chart that Matt had, and also to talk about what we are expecting from U.S. jobs. I mean, is the market going to be quiet today just because we want to know that figure that could change the way we look at tightening from the Fed?
Well, look, it's all about jobs, as you've said. A couple of months ago, we were talking about tapering, and then the conversation went to inflation, and now we're here. We're at the core of the U.S. economy, at least in my opinion. So we've got the jobless claims coming in later today. We had ADP figures yesterday disappoint again, but the thing to note here is they did diverge. They've been diverging from NFPs since May. So I wouldn't take that as you know, the trial for NFPs, but I guess we'll wait and see.
Yeah. I have to tell you that having done this for 20 years, the numbers diverge and converge, ADP and NFP, constantly. So you really can't use it as any kind of decent guide. In terms of the jobs number tomorrow, what are we looking for, Noor?
Well, the expectations right now so far are that we are expecting a bit of a slowed from last month. It's coming in at about 725,000 compared to 943,000. But I want to tell you, though, that expectations last month were completely off the chart there. It was just, the number just massively beat. But I do have something really exciting to tout here, and that is the function Whisper on the terminal. That's WHIS, and that gives you what market whispers are anticipating the numbers to be. So yesterday, when I was looking at the number, it was a lot higher than the surveyed number. Now it's dipped after ADP figures, and terminal clients can actually put in their expectations as well.
Super cool.
Yeah, that's what I think is key. So this, not only does it give you a look at what the market is anticipating, but it also allows you to compete against the other banker bros and sisses in the market, right? Because if you win, if you beat everybody else, that glory can be yours.
Oh, yeah, absolutely, 100%. And look, the thing to note about the U.S. economy at the moment, it is inherently a jobs-focused market. I mean, the oldest thing that I remember from the World War I posters are, you know, Uncle Sam calling people to get recruited. And right now, the post-pandemic American could possibly be thinking about jobs very differently than they did. So they may look to Amazon for delivery jobs rather than manufacturing jobs that were declining according to yesterday's ISM figures as well.
And I'm wondering how all of this translates to the bond market. We were talking about Bill Gross saying bonds are trash, yields have nowhere to go but up. Could a strong jobs print be the catalyst for higher yields?
Well, you know, like my answer to Bill Gross is not an answer, but part of perhaps the persistence of the conversation here was James Carville back in the 1990s, and he's Clinton's political advisor, who came out and said, you know, if I'm ever going to be reincarnated, I want to come back as the bond market. And so it just shows you how intimidating that kind of market would be, that it would intimidate not only a sitting president, but a whole political party in the U.S. as well. Look, it's, yes, yields are quite... Yeah, absolutely. Yes, yields are much higher right now. But the thing to know as well is that the Fed, I don't think the Fed is just going to wake up one day and decide, we're just going to go ahead and sell everything that we've just been buying. You know, the Fed has changed its course into how it talks to markets. We remember how the 2013 taper tantrums happened, and I think the Fed is trying to avoid that in their message. They're being a lot more cautious in their actions and their behaviors, and I don't think that we're going to see, you know, bonds just fall off the cliff. I think yields have room to go lower.
I do feel like Matt Miller actually thinks he is the bond market as well. The Bond Market King by Matt Miller, and we will actually take bets on where we see non-farm payrolls a little bit later, and then we'll post it maybe on air as well. What does it mean for dollar?
Look, a downshift trend in the labor market right now does not bode well for the dollar. Why? Because that may mean tapering may actually be delayed, or it may be a lot more dovish. It may not come as hawkish as many expect. So I was actually a dollar bull, you know, just early on in the summer. I was like, anything the Fed does, that's it. But I'm just now turning. One thing to look out for, though, tomorrow is commitments of traders, and that gives you what their short and long positions come out. They're usually up until Tuesday of the week, and they're released on Fridays. So they may give us an indication of how the market priced Powell when he spoke last Friday, and then next week's obviously a reaction to the NFPs.
Nora, thanks so much. Nora Al-Ali there of Bloomberg Markets Live. Now, coming up on his new book, The American Experiment, Carlyle Group co-founder and co-chair David Rubenstein. That's at 7:30 a.m. in New York, 12:30 p.m. in London, and this is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
The July jobs report was strong.
This is an across-the-board favorable report.
More money, more hours, and more people working.
Wages up.
We're seeing our economy moving forward.
Unemployment down.
The unemployment rate declines by 0.5%.
But will Delta hit the brakes on the momentum?
We could still see the consumer become a little bit more skittish.
A lot of kind of negative surprises focused really on the Delta variant.
Tune in for the August jobs report, Friday on Bloomberg Television and Radio.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early start to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Now let's get the first word news. And a think tank says about 2.1 million jobs in the UK are still affected by the coronavirus pandemic. The Institute for Public Policy Research warned of what it called a hidden jobs gap, referring to positions that remain furloughed or lost. The British government is preparing to end its flagship wage support program at the end of the month. Lawmakers in New York have extended the state's freeze on evictions and foreclosure through January 15th. It was supposed to have ended 2 days ago. The move will provide relief to homeowners, renters, and small businesses that have struggled during the pandemic. In China, ramping up financial support for small businesses hit by the pandemic. The PBOC will provide more than $46 billion of low-cost funding to banks so they can lend to small and medium-sized companies. The economy has shown further signs of a slowdown in the wake of more virus outbreaks and tight property controls. And Bloomberg has learned that Tesla had to temporarily halt production at its factory in Shanghai last month. Blame it on the global shortage of semiconductors. The automaker didn't have enough electronic units. The stoppage lasted for about 4 days, Francine.
Yeah, I mean, one of the things that, of course, we'll talk about at length. Coming up, Jeff Curry, Goldman Sachs, Global Head of Commodities Research. We talk oil, we talk energy, we talk, of course, IDA. This is Bloomberg.
China has been focused for a long time now on catching up to the United States in space when it comes to space exploration, and they've really made a couple of really impressive achievements. For instance, in May, China landed a rover on the surface of Mars. It's only the second country after the United States to manage to do that. In June, China sent astronauts to its space station, which is still under construction. China is not part of the International Space Station because the United States worked to exclude China from that.
but instead the Chinese are working on their own. That's scheduled to be in full operation, I think, next year. The Chinese have really come a long way in space. That said, all of that's run by the Chinese government. There is a role for Chinese companies to play in the space program. They're not being as front and center, say, as Elon Musk with SpaceX or Jeff Bezos with Blue Origin. China's companies are playing a more supportive role, I think it would be a fair way to say it, working on things like satellites, rocket launch operations. They're leaving the really big, sexier items when it comes to space exploration, leaving those to the Chinese government.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London. Matt Miller in
Good morning, traders.
New York.
How are you doing today? It's time to place order to buy euro, and I'm looking to buy at 1.18.452. Okay, order placed to buy euro at 1.18.452. So please place order if you want to copy this trade at this level, and stay with me. Follow my trades, and we will finish this trade in profit. As you can see, we hold short position on euro as well. So we will go into arbitrage if you understand what it's all about. So it means we'll hold two positions. We'll hold short position and we will hold long position as soon as we will get filled. Okay, I'll speak to you later.
Healthcare, travel and leisure, some of the sectors doing well within the European session. Here in the U.S. yesterday, of course, it was big tech that really outperformed. And once again, NASDAQ 100 futures are higher by about 0.25% at this point in the futures session. In the Treasury market, really not a whole lot going on. As Francine said, really just a market waiting for that non-farm payrolls report tomorrow at 8:30 a.m. Eastern time. Ahead of that, the 10-year yield sitting right now at 1.29%. And then I also had to point to Bitcoin, up about 3.3% today. It was north of $50,000, a level it hit back in August, but couldn't close at. We will see if it actually can close north of that $50,000 level today, because it would be the first time that has happened since back in May. Nonetheless, 50,000 or 49,856. You are seeing crypto-related stocks in pre-market trading moving to the upside as well. The likes of Bit Digital higher by about 5.8%. You have Marathon Digital and Riot Blockchain higher by about 4% each, and even Coinbase, of course, the crypto exchange, higher by about 2%. Francine.
Yeah, talking about crypto exchanges, we have big breaking news actually out of Singapore saying that Binance may be in breach of Payment Services Act. Now, this is one of the only regulators that I remember coming up saying that actually they have concerns about Binance, simply because other regulators are saying, I'm not exactly sure what I'm looking at. So we heard from the Bank of England and the UK just weeks ago saying actually because it's unclear where they're headquartered, it's very difficult to look at some of the transactions that they worry about. So it seems that, Singapore now saying that it's something that they're looking at because they're in breach of a Payment Services Act.
People are always afraid of what they don't understand. Have you noticed that?
Normal, no?
Yeah, that's how it goes, I guess. We got to get CZ back on the program, by the way, and talk about this a little bit, because he has done so incredibly well in this business, but I think it takes some really big regulatory risks. I mean, Singapore is obviously not the first country.
Okay, guys, as you can see, position opened. He's on euro, okay, at 1.18.452. Okay, stay with me. As soon as it will reach a certain level, we will place stop, that we will not lose any money. For time being, well done. All of you guys who decided to copy this trade and follow my trades, well done. Yeah, stay safe.
Is exactly what the crypto market needs, but the right kind of regulation. And the question is whether this is the right kind of regulation, Francine.
Right, and a lot of regulators are saying, actually, I don't exactly understand it yet. I'm not the person to regulate it. Maybe it'll come with time, or maybe they just need to get a lot smarter about cryptocurrencies fast. Now, coming up next, we'll talk about commodities with Jeff Curry, Goldman Sachs Global Head of Commodities Research. Usually, I think he also talks about cryptocurrency, so we'll ask him maybe about Binance. This is Bloomberg.
Welcome to El Zonte, known as Bitcoin Beach. This little surf town on the coast of El Salvador is one of the first to go full crypto. Yep, you heard that right. Everything from groceries to coffee to salaries and community projects can be paid for using Bitcoin.
It's actually been crazy how fast it has caught on and how useful Bitcoin's been for, everyday people.
Just to buy something as simple as a cup of coffee can be done quick.
Okay, guys, it's time to place stop on profit at 118.472. We place our stop. If anything will happen, we will not close this trade in loss. Okay, we got 2 pips in profit right now. Let's see where this pair will put us on maybe higher profit. Stay safe.
From business's most influential and instrumental.
I support the new framework. We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Friday, a Bloomberg exclusive. HSBC CEO Noah Quinn sits down with Bloomberg's Francine Lacroix. Find the full interview starting at 5 a.m. Hong Kong time, Friday on the Bloomberg Terminal, and then at 6 a.m. and throughout the day on Bloomberg Television, Radio, and Quick Take. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackwin, London, Matt Miller in Berlin, and Katie Lyons in New York. Now, oil declined after OPEC Plus stuck with a plan to boost crude production. The cartel maintained the plan for gradual supply hikes as demand increases. Joining us now is Jeff Curry, Goldman Sachs Global Head of Commodities. Jeff, thank you so much for joining us. Why did the cartel actually, it was a quick and easy agreement from OPEC Plus. Is this because they found some consensus, or is it simply because demand looks good in the next couple of months and they're not too worried about the world economy?
Well, I think they're looking at trying to get inventories back down to pre-COVID levels, and the rate at which they're bringing supply online with relatively consistent estimates of demand, suggests they're on target for the end of this year of being completely normalized. And now, in terms of, which is why they talk about the April 22 as being the point which they can exit the agreement. But I think to put this in context in terms of the pricing of the market is that the 400,000 barrels per day per month, you put that in the context of the disruptions around Ida, that means you would basically erase this, within 8 days. And I think that's really what we need to be thinking about is what's going on in the U.S. right now, because you're not getting any incremental supply from that region.
Crude, Jeff, has rallied about 40% this year. What's the optimum level? Does it stay amongst the $70 to $75 mark?
I think we're going to learn what that new equilibrium is. We have not seen a big uptick in investment drilling in the U.S. our target is we're going to $80 a barrel in fourth quarter. As we spike above 80, we're going to find out if we start to get that big uptick in drilling activity that many people would have thought would be happening, today in the $70 barrel range. Remember, we almost were at 80, going back 6 weeks ago. So I think, the jury is out on where that new equilibrium is, because let's think about all the factors that are driving up, the underlying cost structure. It's everything from, labor costs, transportation costs, cost of capital, particularly the cost of capital, given the restrictions around ESG investing.
Yeah, we have a viewer writing in with a question, Jeff, that I think it connects to that as well, asking about, overall energy markets at high prices not seen for some time. A, do you see that continuing? And B, does this fall then into inflation readings going forward?
Well, our view, this is just the first ending of a multi-year, potential decade super cycle in commodity prices, driven by three fundamental themes. One is, this policy of redistribution. We're seeing it all over the world, in particular, in China. They just, they call, they just, it was last week, I think, what is it? Common, can't remember the name of the term that they use for it, but we see it in the U.S. with that 3.5 trillion potential extension of the budget. The other big theme is what's going on in the environment. This war on climate change is having a huge impact on gas prices, particularly in Europe. You have gas prices in Europe trading in, double digits per MMBTU, driving up coal prices. Gas prices are trading at parity with diesel. We haven't seen that since 2006. Gas prices in the U.S. just topped $4.50 per MMBTU for, again, the first time since 2014. So this is not just an oil story. We're seeing it across the board, particularly given the environmental. And then the other big issue is this whole idea of resiliency in supply chains around, what do you want to call it, the Cold War with China. We have, onshoring going on in the U.S., transportation bottlenecks. So, again, we think this is just the beginning of, a potential, multi-decade type of environment, or multi-year potential decade type of an environment.
We have a great story on food supply chains on the Bloomberg. Fabiana Batista, Megan Durson, and Sibylla Gross write that in Vietnam, the army has to assist with the rice harvest. In the UK, they need to dump out milk because the truckers aren't coming to collect it. In Brazil, it takes 120 days to reap the coffee harvest rather than the usual 90 because they just don't have enough people. Is the food inflation and even the shortage of labor in that market going to be a problem?
Well, at least over the next couple of years. Food is different than oil or metals. Oil or metals, you have to make long-term, large-scale investments to solve the problem. In food, you make investment in acreage and investment in yields, you'll end up being able to solve it with a good cooperation of weather rather quickly. But even there, we look at the acreage, it's also being restricted in the most recent acreage report in the U.S. because, again, poor returns across the sector for quite some time. So it's not just these labor, or let's call it variable cost issues that you're referring to. There's also more structural factors at play. We call it the revenge of the old economy. Poor returns in the old economy going on anywhere from 5 to 10 years now has restricted the ability to grow supply. At the context that you have the stars, big uptick in demand is creating these tight markets. Again, underscoring why this is just the first innings of a multi-year story.
Let's talk more about the industrial metals, because China's metals industry group yesterday said aluminum has gotten entirely disconnected with the fundamentals, with the rally that we have seen. Do you think it can persist?
Absolutely. The thing with aluminum is there's a paradox in the sense that it is going to be critical. It's a critical green metal to solve climate change issues. So it's got to have that demand, but it's one of the most polluting metals to create because you have alumina, which has got the red mud associated with it. China has huge emissions because remember, it takes a lot of power to produce aluminum. And as a result, you get a lot of carbon emissions out of it. So you need it to solve climate change, but it creates the climate change problem, which means you're going to be in a rock and a hard place to produce this stuff. And then you have to ask the question, who's going to produce it?
So yeah, that's a classic example of a catch-22, I think, Jeff. And then talking about the precious, where are we going to find a catalyst for gold?
All right, when we look at gold, there's three legs to the story. One is, Western investment demand, and I think that's the one you're referring to, that's the weak link. But the other two are quite strong. Central bank demand is quite strong across the board right now. What's different about central bank demand is not just the Turkeys and the Russia that's out buying gold due to political concerns. You have like the Polands of the world buying it for diversification. So it's large scale investment from central banks. Plus we look at the arbitrage into China, very strong physical demand going into China. So the only weak link is the Western monetary demand. And I think there you need to have a focus on what, inflation risk. And I think a rally in oil prices above $80 a barrel could be that catalyst that gets people back into this market. Our target on gold is $2,000 an ounce.
Jeff, the underlying question for everything that you've just talked about is, of course, what do we do with China? Is the third quarter data something of ugly, a symptomatic of something that's quite sinister? Where do you put China right now?
Near term, China is going to underwrite any potential weakness right now, particularly off the back of the weakness that was created this summer with the Delta variant. But I want to be careful about the weakness. The weakness that we're seeing is very idiosyncratic and intended at a very industry level. So let's take like steel. Steel demand in the first half of this year was running like plus 8%. Most recently, it's dropped to minus 5%. People go, oh, I'm very concerned. But steel is one of those sectors that they're targeting for environmental reasons to shut it down because it's very, it creates a lot of emissions. But also the weather was not cooperative to construction over this summer, and that also created that decline. So now that you have, there's a lot of potential for special purpose bonds at the local level that can be used for infrastructure spending that can create that uptick as we go towards the end of this year. I remember the term that China uses, common prosperity. And that common prosperity means that they're going to be focused on these redistribution themes that you're seeing in places like the United States and in Europe. In Europe, here in the UK, they call it leveling. That's going to create a lot of demand for commodities as we look out into the forward. So China, I'm not worried about. But here's one last point I want to say about China is the world's not China-centric anymore. The world is global in the sense that U.S. and Europe are very much part of this story, and you can even see how copper prices are tracking U.S. and European PMIs now, no longer Chinese.
Jeff, you have common prosperity in China. You've got leveling, or the typical sort of democratic socialism that we have here in Europe. In the U.S., in regards to tax policy, and we talked to this about David Costin, what do you expect and how does that change the picture?
Well, when we look at the tax policy, it's not, obviously it's going to have a big impact in David's space because it's going to impact it directly. But when we look at the space for commodities, and here's a really important point about commodities. Physical markets are driven by volume, not finance. In fact, I really want to take a second to explain this because it's critical. Let's take David's markets. They're financial markets. They're driven by how many dollars come into those markets. Let's take commodity markets, physical markets like oil. How do we calculate for bullish oil? The barrels of oil consumed has nothing to do with money or money flows or anything like that, just volume. And so when we think about high-income groups, what do they control? Wealth and income. They can create financial inflation. They can drive David's markets. Can they drive the commodity markets and physical markets? It's numerically impossible. There's not enough of them. The only group that can drive commodity markets in the physical markets are going to be the low-income groups. And so when we think, because they have the volume, and so you can think financial markets driven by higher income groups, physical markets are driven by the lower income groups. And so we think about these tax policies and you think about redistribution going on around the world, it's going to create that volumetric demand growth that drives commodities and physical markets.
Jeff, let's just quickly talk about a market that is decidedly not physical, just digital. Bitcoin dancing around $50,000 once again today. What is the Jeff Curry take on crypto?
Well, when we think about crypto, is that it's a network. The value of the network is what drives the value of these coins. The coin unlocks the network. They're decentralized. The decentralized internet. I like to think about what is Apple iOS. Apple sits at the top, and you have the iOS down there, and you have all the different application producers that report into Apple. All these different cryptos do is they take out the Apple. It's decentralized, and it allows, and the coin is used to create the wealth to trade within that ecosystem. Do I like them as a commodity?
Yeah.
It's just like oil or one of the other. In fact, we like to call it much more closely akin to copper. Digital copper, because it is pro-cyclical and it trades that way. So I wouldn't think about it as being digital gold. It's not digital gold. One last point: gold can exist outside of the network. Oil, copper, and Bitcoin or Ethereum, they need their network. Think about oil. It has no use without a car. Bitcoin has no use without the blockchain. Gold is different than all those. Gold you can bury in your backyard.
Jeff, thank you so much. Jeffrey Curry there with some brilliant analysis, all fired up. Goldman Sachs, global head of commodities. We'll have plenty more on the markets shortly. This is Bloomberg.
Okay, guys, let's place our stop higher to better level to 118.50. What is it? 45, 47. Let's place to 48.2. It will give us 3 pips in profit. Okay, let's move this stop for euro against United States dollar to 118.48.2. Stay with me.
Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacroix in London and Kaylee Lines in New York. Now, Bill Gross is trash-talking the bond market, literally. The PIMCO co-founder says long-term Treasury yields are so low that funds that buy them belong in the investment garbage can. Joining us to discuss this and more is Barry Ritholtz, Bloomberg opinion columnist, Ritholtz Wealth Management chairman and CEO, as well as host of the very popular podcast, Masters in Business. So, Barry, what do you think about the erstwhile bond king trashing the paper?
So first, I'm a fan of Bill Gross, and while he had kind of a bad ending to his long, 40 years at PIMCO, everybody forgets what a fantastic streak he was on for the first, 3 decades or so, and built PIMCO into a $1 trillion business. So kudos for him. We've watched people say that bonds are junk and this is the end of the bond bull market that really began back in 1982 when Volcker broke the back of inflation. And, all my technician friends are fond of pointing out that, hey, the trend is your friend. And if you want to just keep guessing when the trend is over, you can. But so far, being on the bullish side of the bond market has been the moneymaker. Last year was, a modest, flat to soft year in bonds, but by and large, rates have continued going lower and lower, and it's hard to say that the bond bull market is definitively over. The yield we've seen over the past 12 months suggests that, hey, maybe this is the end of it.
But Barry,
Gross could be right, but people have the landscape is littered with the bodies of strategists calling for the end of the bond bull market.
But Barry, are you saying he's wrong? Period, or is he, not wrong, but it's a matter of timeline of how quickly that happens?
Well, I mean, the rally in bonds that began decades ago took a pause last year, so maybe he's right, but it's not the first time we've seen this. And, until the Fed ends QE, ends ZERP, starts normalizing rates, we could be stuck here for God knows how long. Mm-hmm. And P.S., I was impression like everybody else back in 2018, hey, maybe the Fed is serious about normalizing rates and getting us back to, a crazy number like 2.5% Fed funds yield.
Yeah.
And then, things went off the rails. It doesn't take a whole lot of economic issues to get the Fed to cut these days.
Barry, we just have about a minute left, but are the equity bears going to meet the same fate as the bond bears?
Well, so far, are there really any bears left in equities? It
Tobias
seems like
Citi sees this going to 4,000.
All right, good for
one.
him.
There's one.
So here's the issue that I think we run into on the equity bear side. People misunderstand this bull market. They misunderstand how long bull markets run in stocks. And I date this bull market, the secular bull market, to when shares broke out to 2013, to new highs past the trading range. There's a ton of capital, not just Fed largesse and not just CARES Act trillions of dollars coursing through the system. There's a ton of capital looking for a home. And until I see something and profits are at record highs, it's hard to be bearish in that environment.
All right, we'll have to get you back on with that call. Barry Ritholtz of Bloomberg Opinion. Now, an exclusive conversation with the HSBC Chief Executive, Noel Quinn. That's a little bit later. You can watch the full interview first on the Bloomberg Terminal, starting at 5 p.m. in New York, 10 p.m. in London. And then an hour later, you'll also see clips on Bloomberg TV and all of our platforms. This is Bloomberg.
predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world. If you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
The consumer is very healthy. We're unburdened by debt. We're saving, and we have the demand. The demand is there.
I strongly believe that the fundamentals are not anywhere near as supportive as many are making out.
One thing you don't want to do is to be out of the market.
At some point or other, we get a shock and the policymakers overreact.
We're trying to balance out all these pressures and figure out how transitory are they and how long will it take and which companies can navigate this the best.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures up around about 0.2% on the S&P 500. TK record rainfall in New York City, a little more than 3 inches in a single hour in Central Park yesterday evening.
Yeah, not only record rainfall, John, but it was the way it was record rainfall. Massive shout out to our team for getting in to make us go live here. Everybody's showing up, but some real damage, John. Right now, John, it's up north to Boston, Buzzards Bay and Martha's Vineyard getting not hammered right now. That's not the right weather language, but the storm continues to the northeast.
I've got to say, Tom Keene, for me, easy commute into work this morning through Manhattan. I've got to say, for a lot of other people, though, it's been really quite difficult through last night and through this morning as well.
It has. Sikorsky was down as they came down Fifth Avenue, John. The police were stopping all the traffic through Central Park. Over 3 inches of rain in 1 hour in Central Park. Abramowitz's kids were out with cups going, how do they measure the rain?
Lisa, it got messy pretty quickly.
I love your image of the Abramowitz household. Thank you very much for that, Tom Keene. But you really have to wonder what this will do to also some of the work from home, just on a larger basis. The idea here of what these disruptions are. Does it mean actually that things are less disrupted in some ways because of the business continuity plans? Because everybody's been doing this already for how many, months now? 2 years?
John, I got to note that the Abramowitz kids checking the weather, the amount of rain, those were Budweiser beer cups from
That's
a
right,
Mets
Tom.
game.
That's your description of the Abramowitz household. The kids have got Budweiser beer cups and they're hanging out.
Then they have a Mets logo on the side.
Lisa's going to be thrilled with this. Parents' evening, teacher-parent over at the school for the Abramowitz kids, Tom. That's going to be interesting.
It's going to be good.
Yeah, look forward to that. Should we talk about this data?
Let's talk about the market.
Let's talk about the economic data as well, Lisa. Jobless claims out a little bit later this morning. Payrolls coming up on Friday. And Tom, demand, tons of it. Supply, where is it? And that was in the ISM yesterday.
Bears in retreat. I mean, some of that data's there, and up we go. I take your point, John. The jobs data tomorrow is critical, but you really wonder how the Bears recalibrate. Into the jobs report and out of it.
Let's talk about this equity market. Equity futures, Tom, up 8. We advanced 0.2% on the S&P 500. Yields come in by about a basis point, Lisa, to 128.52. Your FX market, euro dollar, 118.51.
Yeah, and I think it's interesting to note crude, too, this following the OPEC Plus meeting that took about an hour virtually yesterday to decide to maintain some of their output increases. Affecting crude, not at all. Earlier, a little bit lower, now basically stable, a little bit higher. Today, 8:30 a.m., we get a read on if the Delta variant has had a material effect on the labor market. The expectation is no. U.S. initial jobless claims are expected to come in lower than the week before. The idea here is that the momentum continues. There is a robust recovery underway. Admittedly, perhaps softer than otherwise would be based on the increase in the pandemic. 11:30 a.m., you guys were showing those images and talking about how difficult the flooding has been in the tri-state area in the Northeast. President Biden is going to be delivering remarks on his administration's response to Hurricane Ida. This response has to extend beyond Louisiana, obviously, as the hurricane has made its way up, become a tropical storm, and become just a heavy storm all the way to the north. The question that I have is, this is not a one-off. It's one-off for this particular storm, but they are getting more frequent. The climate change is allowing some of these storms to get worse. How does this factor into the infrastructure plan and the sort of fortification of areas against flooding
Lisa,
and things like this?
I'm really glad you bring that up. That dovetails with Greg Vallier's note this morning, which is 5 reasons we're not going to get an infrastructure plan. And it's pretty tenuous, the one and the two plans together.
Well, and the support on the Republican side and the Democratic side for the $550 billion plan, how much can that push it over the line? And aftermarket, we get earnings from Broadcom, HPE, and DocuSign. Broadcom, I am interested in particular for a view forward as to the chip shortage. John, how much does these shortages that we're seeing, including in the chip sector, including in the food sector, really feed into a diminishing of the GDP? The idea here that if you don't have stuff to sell, it's not going to get sold, and that directly goes to the bottom line of growth.
Yeah, let's go straight to the data out of the last 24 hours. And Lisa, thank you. And the ISM, Tom, new export orders expanding, inventories running at low levels, a backlog of orders still there. That's all demand. Let's talk about supply. The employment index contracted. That led to some actually revising their outlook for payrolls this coming Friday. Why? Because we're still struggling to get the adequate labor force supply to meet the demand. That's still the story in September.
John, help me here, and it's just a hunch, folks. There's no academics here. I'm sorry, when I see 40,000 jobs needed here, 10,000 jobs needed here, there's a labor shortage because some of these technology-driven juggernauts are hiring tens of thousands of people.
They're trying to. And does price make a difference? And we talked about September for so long for 2 reasons. Lisa, return to school, point 1, and the expiration of the additional unemployment insurance. Is that going to make a sufficient difference, not just to the August data, but September, October, November, into December, into year end?
You know, there are increasing studies that show perhaps not. And you pointed yesterday to that Wall Street Journal story showing that states that ended the enhanced unemployment early did not see a material uptick in the number of